Welcome to the Thursday 8th of May show of Trade Live with IG, myself, and the one, the only, the people's favourite.
Should I introduce myself now? Or?
I wasn't talking about you.
Oh, right.
We have got on today's show the ex-CEO of Weight Watchers. That's right, Ronnie is back in town as Weight Watchers declare bankruptcy. We've got the Chief Eating Officer. How are you, sir?
Oh, I'm absolutely brilliant. Do you want to tell me how the guy from the before pictures of Hims and Hers hair loss products are doing?
Touché. You know what? I've got to watch because I can't take my head down too much.
I mean, mate, there's children watching.
So when your brain grows, then it grows out the top of your head. That's why there's a bald spot there, isn't it?
Okay, yeah.
The crown.
Yeah.
Right, let's have a look at what's coming up on today's show. Ronnie, take us through the action.
Overnight action. We started off strong Scottish duo, me and Richie Rich, and then we proceed. You're not done with me yet. We proceed to opening bell. And then we move on to fast markets with me and Angeline.
At 8:30, we've got Pierre Buckworth coming in. That's right, Piers is back to run us through what he thought of the Fed and the Google Apple news yesterday. Big statement there from the head of services of Apple. And just going to have a chat to Piers as well. Then we've got part 2 of that Tony Battista interview. That's right. If you missed part 1, then by all means go on to our YouTube. Have we got it on YouTube yet? No, I don't think we do. But we'll publish both of those on YouTube in the coming days as well. And then at 9:45, we have Angeline Ong and the top Scandinavian guy on the show today.
Yes, so we have Patrick Tomenius representing Sweden, showing the diversity of knowledge here. Because I'm Scottish. I'm not actually Swedish.
You were adopted into our family, my mother says, I'm sure.
Oh.
Right, good morning, Boise. Good morning, Monkey Man. Monkey Man, it's a solar panel. That's right. Well, this weekend it should be. Shane Zimmerman in the house looking at why gold is dropping. We'll have a look at that in a minute. And we've got Steve Davies in. We've got Julian and Maturin. Here we go. Here we go.
And we got my man Boise. I love him. I love Boise. He's my guy.
Right. I think we'll go into overnight action. Let's get into the Federal Reserve. What happened last night? So yeah, let's show you the Times take on it all. So Federal Reserve holds US rates on concerns over economy. Now, what concerns were those? Well, let's go to the statement, Ronnie, and let's have a look at exactly what was said that I must say it surprised me a little bit. The committee is attentive to risks on both sides of its dual mandate and judges the risks of higher unemployment and higher inflation have risen.
How is that surprising to you?
Just how much in Trump's face he went.
Oh, yeah, but it's also, I don't think, I like to believe that, I kind of admire Powell because he's been very objective and data-driven in his approach, and he hasn't been bullied. If he's punching back, I'm not sure, but matter of the fact is that it's true. It is Trump's policies that are potentially leading to all of these things. And
the quote in the press conference was even better. So obviously we're on pause at the moment. We think we're in a good position because we simply don't know what effect tariffs will have. If they are confirmed as they are at the moment, you'll get higher inflation, slower economic growth, and an increase in unemployment. So he said it as it is, but he also alluded to, well, they are what they are at the moment, but we have no idea what they'll be in 30 days' time.
Exactly. That's the sort of theme of whoever you're listening to. No one knows what's going to happen because we've never seen this before. Yeah. And I would be extremely surprised. I said it earlier. I don't think that the Fed is going to cut now. I don't think they're going to, perhaps not even cut this year, because That's a bold statement. Just putting that out there.
Well, let's look at the odds. Ronnie is right that they're not going to cut in June, because that is what 80% of the market alludes to. Then July, we've got a slightly higher increased chance of a rate cut. September, you can see now we've got 2 priced in, and by December, we basically we don't have a clue. We do not have a clue. Look at that.
Yeah, because no one has a clue what's gonna happen.
Yeah.
And I think there's a lot of factors that come into play. One, potential inflation, potential stagflation, higher unemployment rate with the major redundancies done in the government sector, as well as higher cost coming to the private sector. So it's a bit of a perfect storm brewing. Iron brew, no pun intended.
Iron brewing, yeah. Well, yeah, chart off there. Thanks, guys. So basically, he lined us up for a fantastic summer, didn't he? It's going to be volatile. It's going to be hectic. Probably keeping risk, a reduced risk, and being nimble is probably the order of the day still. But that doesn't stop the futures. No. You'd think with all that we'd be lower than where we are yesterday. Oh, of course not. It's the S&P 500. Of course it's up 60 basis points overnight, because Trump's about to announce a deal with a huge, important, respected country.
Huge.
Who could that be?
I don't know. Sweden is part of the EU, so it's not going to be, and Scotland is not. So yeah, I've heard whispers on the desk that it's going to be the mighty United Kingdom.
That's right.
Which we hope for.
3 o'clock this afternoon. We are the first trade deal. Start with the easiest.
First to come to the table.
First to come to the table. And that's what was argued, that it's going to be easier to be first. So let's see. Aston Martin worth a little flutter on the day, do you think?
Well, I'd hope so. Maybe you need to pick one up, Rich.
Yeah.
Increase the numbers. I think they only sold 900 cars last year.
No.
Yeah, something like that.
Nah, can't be.
Extremely low figures. I mean,
fact check.
Fact check.
No, not fat check. Fact check.
No one heard fat. It was just Rich. I do love Aston Martin, but I do think that they're sort of the least of the concern of the automotive industry. They've got strong backers in terms of Saudi Arabia and Lance Stroll, his dad.
And the 6,000 cars sold last year.
That's literally what I said.
Yeah, per month. Poppy saying get ready to sell more S&P as more trade deals go through. That's right. We can't just go up for everyone that's announced, because there's about 60 trade deals to come, right?
Well, yeah. I think certain are going to weigh a bit heavier than others. For example, we saw, and it's also going to be interesting to look at how they affect different companies. So it's going to be more than just the index. So we saw, for example, as soon as we saw Cambodia and Vietnam say we want to negotiate, Nike, Adidas, all of these guys jumped. So it's going to be, you have to look at where the sort of trade is coming and which companies are affected. So that's how you can pick out the winners from that.
Yeah. I guess we've got to watch Pharma today as well. That'll be much more market moving than Aston Martin.
Yeah.
So yeah, Astra, GSK.
They had a pretty rough day yesterday. Pharma, GSK down close to 5%.
Right.
And then AstraZeneca down close to 2% as well. AstraZeneca has also come out and said that they're going to narrow their spending and focus, and they're going to go into the more weight loss space, focus on that more. Please leave some space for my beloved Novo Nordisk.
Now, speaking of Novo Nordisk, speaking of weight, we have
walked straight into that one.
Weight Watchers filing for bankruptcy. So Oprah had a shocker there. Remember, she got given shares to represent them, and she did it for a year, and she was like, "No, this company's out," and she sold all her stock. But very wise.
DJ Khaled got a similar deal as well.
Oh, really?
Yeah.
So yeah, shares in the business slumped by 35%. They are a bit of a lookalike, leaving it with a market value of $64 million. It was once worth more than $2.5 billion. Oh my days. So yeah, that was a great short.
Yeah,
a great
I mean,
shot.
I had actually had quite a few clients calling me on Tuesday, placing some short trades on Weight Watchers.
Really?
Yeah,
Wow. Well
tell you
done
who.
then.
Can't tell you who. I don't indulge in such information.
So we need to get you on the show when things like that happen.
You need to get me on the
Insightful. Yeah, we need to get you on more often. That's right. Tom Roberts, are you listening? Now, we've got a bit of a mission today, and the mission is we're on 575 subscribers on the YouTube. We would love that to get to 600. It would look so much nicer with a big 6 at the start of it, wouldn't it?
For the viewers at home, producer Phil has realized that it's not really any. It's not going the way he wants to when he's yamming it in our ear. So now he has on both screens. He has like and subscribe, please.
We'll take a picture. You concentrate on your polls for the day, producer Phil. He's nursing his shame. Arsenal, God, they didn't get to the final.
Oh well, I'm quite happy actually because as you guys are aware, I'm a massive Liverpool fan, and we've had a rough couple of days. Got kicked out of the Champions League. Obviously, we won the league. We won the league easy, 15 points ahead of Arsenal. But I'm surrounded by Arsenal fans at IG. So as soon as we got kicked out of the Champions League, and as soon as Trent announced that he's leaving, I think my team's inbox got spammed with everyone trying to hate on me. So payback.
Yeah, you can take a lap of honour.
Thanks.
Say au revoir. Right, we've got IHG numbers. So IHG, a solid start to the year. In their trading update, Group RevPAR was up 3.3% year on year. That was the high range of consensus. We've got, they opened 14,600 rooms.
Sorry?
14,600 rooms they opened in the first quarter.
That's
7% up year on year. The Deutsche Bank view is, even if the start of full year 25 is relatively low in comparison to other hotel groups, both the pipeline and the RevPAR are at the high end of consensus expectations. Deutsche, Numis have got them on a hold with a £77.50 target.
That's interesting because if you look at a company such as Airbnb, they've had a quite rough year in terms of their stock. I mean, they were up at 163 in February, and now they're trading at 123, bottomed at close to 100. So it's interesting to see how these sort of legacy players are beating these sort of more nimble companies. But I'm happy for them.
Well, they have, so they're off the highs down. So that's a daily chart, people. That is a daily chart, and you can see there we've come off from £108, £108 down to 86 at the moment. So so their price target's still 10% lower.
Are you? What's your take on them?
IHG, it's not one I've ever traded well. I don't have any insight. Much better in Whitbread.
Oh, Whitbread?
I'd rather be in Whitbread.
Right. Okay.
They own hotels, yeah?
Oh.
You get mixed up with something else?
I thought you were talking about like a bread company.
No. So Whitbread own Premier Inns.
Okay, right. Yeah, that's more your style.
Yeah, the bread's more your style, mate. Yeah. Stay off those carbs.
Oh, blimey, mate. Let's not talk about the guy who had to self-exclude himself from Greg's.
It's true.
The thing is, I'm not a massive fan of hotels in general. Yes, they've adopted a sort of a franchise business, which they have a leaner model. They don't carry so much fixed cost and capital expense. However, going into, a bit of a downturn economically where consumers are tightening their spending, I think luxury hotels and, yes, they have sort of the lower end offering as well in the portfolio, but I think travel as a whole will probably take a beating in a cyclical downward spiral.
You've actually just reminded me, I wanted to have a look at the recruitment companies. So Michael Page, under the stock Page Group, I know they've got a lot of temps. They've got a lot of exposure. Obviously, they are a recruitment company. Look at this stock. If you thought that we had potential going into recession, what an incredible short that has been, down from £4.80 to currently £2.60. So that, is the outlook for employment, for temps, and Page, not just in the UK, of course, all over the world.
Yeah, we need to get some temps in for you, mate.
Balfour Beatty we've got as well. Let me get some news from there. Sorry, it's an AGM trading update. Yeah, trading update. States that the trading is in line with expectations. Positive momentum in the group's key markets having continued. We retain P&L forecast. This is from Numis, our partners across there. They've got full year 25 guidance now increased to 900 million to a billion from 800 million previously.
Yeah, and they are well on their way.
That's cash. Yeah. Q1 25 average monthly net cash was up 40% to over a billion.
That is strong.
And a strong guidance. That reads well.
Yeah, and they're also well on their way. They're well on their way to complete the 125 million share buyback plan, with about 46 million pounds completed year to date.
Right.
Don't get too excited now.
Stock expected to trade up 2% on the open there. So yeah, Balfour Beatty we've been through. We've got the trade deal, and then of course, before that we've got the rate decision. So you're gonna keep Stum at 12 o'clock today, please?
Yes, I will be sat on the desk, adult diaper ready. I'm not getting off. I am ready to service our clients.
No, at 12 o'clock you're not answering any phones.
Why not?
Because you're standing up and saluting to our brave heroes of World War II.
Oh.
It's a minute silence.
Right, that's exactly what I meant, yeah. I'm not going to the toilet because I'm saluting the heroes.
And then at 2 minutes past 12, we've got the Bank of England rate decision, which is the first time I ever remember that happening.
Well, it's good for the veterans, lower their mortgage rates, hopefully.
Yeah, a double whammy.
Double whammy, mate.
Yeah.
I've always said, Bowley, he's a man of the people.
Do you think we get a cut?
Yeah, 25 basis points. What do you think?
Yeah. Yeah. It should do.
Wait. Are we agreeing?
Well, is the market consensus the same? Or what about you? Say, let's see.
Let's get a poll out. Phil.
There you go.
Dr. Phil.
Oh. Wakey, producer Phil.
Yeah.
Do you, the people of the chat, expect a UK rate cut today at 2 minutes past 12? Yes or no? It's a simple one today. There's no only time will tell today. Do we expect a UK rate cut today? That is the poll of the day.
Time will literally tell.
Ronnie, what else are you keeping an eye on this morning? We got Cairn Homes.
Caring Homes is something that is quite interesting because in line with that, the UK construction PMI rose slightly to 46.60 from 46.40. So very, very small rise. However, it's showing a bit of momentum for the home builders, and something that the current government has promised, one of many things, is to remove the red tape in construction and planning. So I think overall the future for the home builders and the constructors are quite bright.
Yeah.
What do you think?
Nice. So Cairn Homes is actually not Caring Homes.
Oh.
Yeah, that you're going to try and send me to soon. Cairn Homes up 2% with a trading update in line. Experienced a strong sales period. Cost inflation below guidance. So of course that is large Irish exposure there across. On the other side, we got Flutter up 2%.
Yeah, they had some strong results up. Let me get the RNS.
Revenues are 3.67 billion, up from 3.4.
7.9% year on year.
Nice.
Very strong results.
Yeah.
What else do we have? US revenue grew 18%. International revenue grew only 0.6%. However, overall, very strong results from the company. They've grown, even though they haven't grown as much as we wanted internationally. They've grown on the home arena and as well as the US. So very, very strong results there.
Should we have a look at how they've done? The US stock, let's look at that. Yeah, not too bad. That's the daily chart going back to the start of 24. So, yeah, they didn't have a great earnings update in March, did they, from memory? I think they had, or was that Entain? I can't remember. Somebody had been hit badly in
Entain had pretty good.
A couple of bits.
But what's interesting is I keep coming back to this, companies that work well in a downward economic cycle, the sort of sin industries are sectors that produce good results in weak economic cycles. So we see gambling, alcohol, that sort of stuff. They often obviously low cost efforts. They often produce quite strong results in a downward economic cycle. Why that may be, I'm not sure. I can speculate. Not very PC, my opinions on that. But that is something to keep an eye on because we see them doing quite well.
Yeah. Yeah, absolutely.
And the figures are there to support it.
Got any Bitcoin?
I do.
Nice, well done. You'll be a happy man this morning. Closing in on 100,000, as Gavin Ackers points out. We got up to 99. Oh dear, excuse me. That's producer Phil. That's Piers arrived.
Wait, sorry. Before we just move on, is Camila Cabello Havana your ringtone, mate?
Busted. Havana, da da da.
We had Persia, our lovely cleaning lady. She had a similar experience. She had Tyla's Water as her ringtone going on. Maybe you two can sync up on getting the ringtones in order.
You know, she goes for a run every morning before she comes into work.
I'm not surprised. Persia's a beast.
Yep.
She told me her age, and I was very surprised. I thought she was about 20 years younger. Said, what? Rich looks about 20 years older than you.
Right. Next. That's it. We're not moving on from this one. We are looking at the stock that is one of the best performers in the FTSE consistently. Absolutely incredible.
Yeah.
13 weeks, maybe the guys will get it up on screen even. In 13 weeks to the 26th of April, next full price sales were up 11.4% versus last year. They're increasing their guidance yet again for group profit before tax for full year by 14 million to 1.08 billion.
Something that really caught my eye on the next RNS was that we see that the 1Q full price sales were up 11.14%.
Yeah.
And that's really interesting because one, they show strong pricing power. When people are clinching their wallets, they can still get consumers to pay full price and don't have to lure them in with discounts and lower margin products. And they've also grown online close to 9% and in retail offline stores 5%. So they're getting foot traffic, online traffic, and they're getting consumers to pay full price.
And they're not getting hacked. Absolutely brilliant. Personally, I've never shopped at Next, but I really like the stock. I think the numbers keep coming up. It seems like every time we talk about Next, they beat the expectations and they do very, very well. And they've also boosted their full price sales forecast, which is even a stronger sentiment to it. Nice. Right, we're going to be looking, they're looking up over 3%. Up 3% next. Any other movers we will go through after this quick break. See you soon.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back, everybody. Have you liked and subscribed? Have you? Shall we do a quick check?
Yes, please like and subscribe so producer Phil gets to keep his job. That's his direct KPI.
He's just let us know that he muted.
Back, everybody. Have you liked and
He muted Ronnie's mic.
Amateur hour today, is it?
Well, he's silly boy's just been in showing you that he muted your mic. So as soon as Ronnie was talking about Arsenal getting beat by PSG last night and getting out the trophy. Too late, can't get mine muted. They muted Ronnie's mic. That's freedom of speech.
Exactly. I don't think Frosty would be a big fan of that.
Yeah, exactly. Where is our Frosty man?
Where's our Frosty?
Come on, Snowman, back in here. Lil Wabbit, good morning to you. Thank you very much, man, with style. That's right. MicroStrategy has some style, that is for certain. Let's get a update on that one. I haven't looked at that for a couple of weeks. It's at 400. Wow.
I have a friend of mine in the Stockholm office. He's a mega MicroStrategy bull. So when he got a loan to buy a flat in Stockholm, he managed to buy the flat for cheaper than what he took the loan for.
Right.
And whatever he had left, he put in MicroStrategy because he's such a bull on MicroStrategy. And I remember I was talking to him, down when it was sort of dropping quite a bit, and I was sort of, being happy about it. Haha.
That's nice.
Your financial life's in ruins. And now he's getting his payback.
Yeah, I bet he is. Right, we got any upgrades, downgrades today? Not really. Trainline rated new buy at Investec. We've got, not too much else, to be honest, I'm afraid.
What about Metro Bank? Total deposits fell 4.4% quarter on quarter, loans minus 6.1%. Now that's a nice short sell, Metro Bank, if you sold the top there. Bank with them?
I used to.
Seriously?
Yeah. I used to date the PA of the CFO.
Oh. This guy's a career social climber.
And I, because of that, I would never buy the stock again.
Smart move.
Hearing what was going on at the top. Okay, here we go. London Stock Exchange. Ronnie is opening the UK market on the day of a potential Bank of England rate cut on the day that our heroes back in 1945 managed to have a couple of days off. There we go. We got them all ready for it. Barclays up 1.5%, above £3 again. Look at that. The FTSE strong on the open. The Pru up 1, St James's Place up 1, and Bats, despite a story in the press this morning that one of their biggest shareholders is selling, or top slicing at least.
Sorry, who is this?
It is...
No, sorry, which stock are we talking about?
Bats.
Oh, right.
British American Tobacco.
I am a consumer of their products. Just kidding. I would never.
You must be Swedish Match, no?
Possibly. One thing that caught my eye beyond Trainline is Scottish Mortgage Investment Trust. I know Luke Moore and I are big groupies of Scottish Mortgage Investment Trust.
Yes.
I got interested because of the name, but the underlying company is doing great because one of their biggest holdings, Mercado Libre, have beaten expectations once again.
Oh, really?
The Amazon of Latin America. And they are sort of expanding beyond that as well. So imagine if you had the opportunity to buy Amazon in the beginning.
In Latin America.
That's Mercado Libre. Even my cab driver in Boston was bragging to me about how he bought Mercado Libre when they were trading at a lower figure.
We got NatWest up 1.4, ABF Primark up 1.6, BP.
Strong opening for the banks.
Yeah, very strong, isn't it?
BP, they're up. Can't believe my eyes.
BP up 80 bits. There it is. Whitbread, or what bread, as Ronnie likes to think. Up 1. Barrett's up 90 basis points. And Lloyd's up 1.
Rich, any truth to Shell acquiring BP?
Not yet.
Not yet.
Not yet.
What are your sources telling you?
No sources other than Bloomberg, but just the kind of feel. The CEO came out and said that he'd rather buy his own stock than BP a couple of days before the rumor hit the tapes.
I mean, that makes sense. It's a better company.
Doing a buyback, yeah.
Yeah.
Yeah. Standard Chartered up there, 1%. There's a article about them in the Times today, just looking at whether it's time to buy Standard Chartered or not. Look at that mighty stock above £11 for the first time, but no, we don't talk about that. Tesco, yeah, is that all-time high?
Tesco?
There's a stock somewhere around Tesco, I think might be an all-time high today, but...
I did let the record show that the demo did buy Tesco when it dipped down to 320. Did sell at 340, however, but...
well done.
Hey.
That's good. A win's a win.
Bank. How did your Deliveroo trade go, by the way, with...
Made 1.5%. Or 2%. It was, yeah. But that's still a win's a win. National Grid down on the day. Fresnillo down on the day. We're getting down to the unchanged here. Next, only up 1.3, actually.
That's a bit disappointing. They were indicating to open at 3%.
Yeah. So potentially in the price there at Next. So what I haven't seen yet is Vodafone. Oh, Vodafone down 1.7%.
What?
Ooh, I might take a bit of profit there, actually. I thought today that I would have actually got hurt in that because the FTSE was up so strong. So yeah, remember, we shorted Vodafone on the open yesterday with the news of the CFO's departure.
Trust no one.
At 72.7. Now we're going to buy some back at 70.3. That's been a really nice trade. We'll take 20 off and we'll stay short 40. Right, what else we got to look at, Ronnie? FX and commodities. And
yeah, I've got producer Phil in my ear nagging about autos, but we don't care. We care about the market, the major commodities.
Oh yeah, we didn't check Aston Martin though. He's right. Oh, it's not up 6%, is it?
Live leak. There's trouble in paradise here.
Oh,
you guys should hear what I'm hearing.
Talked about this yesterday. The trade deal between the US and UK was talked about yesterday. They said they were going to carve out autos.
Oh.
And this thing we could have bought yesterday. Oh, to be fair, it did open up high and then came down again. I think that's an interesting trade for the day, but well,
Yeah,
Cam's saying we've missed it, but when you look back at Aston Martin, where it's come down from, I think it could go about another 25%, and we probably haven't missed it. Don't know.
I don't know. I think Aston Martin trade is something, you know, if you're bullish on it, that's something I would look for a more longer term play rather than a short intraday trade.
Yeah.
As much as I love the brand.
Jaguar is making a very valid point on the chat. We haven't talked about Nvidia. Nvidia was up 3.5% at about 8:42 p.m. last night. Just as the market was cruising along at 5,610, it jumped about 0.5%. And that was because the chip export restrictions are being spoken about taken off.
And it dragged its peers with it up. Qualcomm was up, Micron was up, Broadcom was up. So across the board in the sector, it was very, very positive news. We're getting, what are we trading at Nvidia now? I'm not sure if this is sort of like, because we all talked about a sort of pullback on Nvidia, it's getting too high.
117.
We're still not at the peaks.
Can't keep a good stock down though. We will talk more about Nvidia with peers at 8:30, as well as their peers.
Phil, how much longer, mate?
Right, oil. Let's look at commodities for you. Oil up 30 basis points, $58. Very boring. But yeah, gold's coming off there again. What do you think, Ronnie?
I mean, I think gold is a stock that sort of worked as an inverse to the market. So whenever we see positive news, whenever we see some sort of relaxation on the tariffs, gold goes down. Whenever there's a new sort of headline coming out, we see gold going up. So I think for me, I'm looking at gold as a sort of inverse headline trade. So whatever the headline is indicating, gold is doing the opposite.
Yeah, true. Yeah.
But I mean, we touched 3,500 this year, quite early on in the year. I think we've peaked there, and I think unless we see sort of because now the cat's out the bag with the massive tariffs and all of that, I don't think there's much that could sort of out the spot gold to come at the level or get above that level this year. I think we'll sort of stay in the 3,300, 3,400 range.
With the way Powell was speaking last night, you're not going to get rate cuts until July, which means you don't have the expansionary monetary policy. They're still restrictive.
Yeah.
If Trump walks back tariffs from here, then that's a double negative for gold. So I must agree. I've still got that put spread on of the 33.50. Let's just have a reminder what level that is at. Put spread of 33.50, 3,200. But I have been trimming the put as it dropped to it got down 3,240 last week.
Yeah.
So I trimmed some of that. But yeah, maybe now time to trim some of the lower leg as well. Right. Foreign exchange, sir.
Let's see.
Or do you want to look at Bitcoin? Which one do you want to look at?
Let's start with BTC, which is only available to our professional traders as there's high risk involved in trading Bitcoin on leverage.
Yes, do not trade Bitcoin on leverage. Okay, so there's the 12-month chart.
Gonna check my holdings. I'm more of a buy and forget guy, but let's see how my Bitcoin holding is doing. Keep talking, please.
I had a dream a couple of nights ago that it goes straight to 150,000 in the next few months.
We're up 15%, mate.
Well done.
Real money.
Hats off. The real money. Real Ronnie money. Good stuff. Well done, sir. Well done. But yeah, really interesting, isn't it? It's gold has had an incredible surge, and this one has just been a little bit left behind. I'd rather be in this than the Nasdaq.
Yeah, I 100% agree with you. We see further adaptation. We see more and more companies listing with the same sort of strategy of sort of simply being a cheaper alternative to get Bitcoin exposure. And these companies are buying, holding, and increasing their holding. And with the finite resource that it is, continuous purchasing and continuous holding is just something that's going to push the price up. Even talks about, you know, the Czech central bank buying Bitcoin holdings.
Yeah.
I have beef with the Czechs.
That was a few months ago. That's not new news. Though.
No, yeah, but it's like that's sort of
Just
discussion.
in case people thought that was
yeah,
today's.
of course. A couple of years ago, a central bank buying Bitcoin would never be on the table.
No.
So it's something that's interesting, but it's a double-edged sword. With market adaptation and sort of normalization of the assets, we see further market correlation. So the fact that it's sort of this digital gold and a hedge, I wouldn't take it too much to that. At the end of the day, this is a speculative asset. So when trading Bitcoin, you have to be aware that, you know, the underlying is solely based on what the next person is willing to buy it for.
True. Yeah, no yield. Although there are things that you can get some kind of yield from them lending it out and things like that. But essentially, no, it is no yield there. Right, it is time for me to leave you. Do not adjust your screens when we come back from the break, because there's going to be a very different person looking person here, and it's not Ange. Ange is going to be where Ronnie is. Ronnie's going to be here.
Thank you for
clarifying. Producer Phil, you can just widen the box a little bit. And we've got the results of the poll. Do we expect a UK rate cut today? 81% of you saying yes, 11% saying no, and then Phil saying only time will tell.
Yeah, and interesting to keep in mind, when Rich comes back, we'll have a camera on the back of his head, so please make sure your children don't see the screen.
Subscribe.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to Fast Markets with myself and Ronnie. Wow, that was a quick change, Ronnie.
Oh yes,
You're really
indeed.
swift on your feet, not like that Rich over there.
Exactly. Yeah. No, he needs a hip replacement.
Ooh. Ronnie, I love your bits. Let's get across the fast markets that are moving right now. Just checking on the indices really quickly before we move on to some of the biggest movers. We're seeing it's pretty much risk on at the moment. Seeing a lot of blue there, not too much red. The Tech 100, Wall Street, US 500, all making gains there. Germany 40 also marching forward. And the FTSE 100, not too shabby there, up 0.5%. So let's have a look at the watch list for some of those individual movers there. If you are just joining the show right now, Ronnie, take us through some of the big winners.
Yeah. So we got Weir Group, which is the biggest winner of today, and I'm passing that one to you, Ange, because I've never heard of them before. Scottish Mortgage Investment Trust, talked about it before. The big underlying factor there is Mercado Libre, who beat estimates. They came in quarter one net revenue at 4.9 billion, with estimate 5.5. So they beat their estimates by 400 million. Incredibly strong company, incredibly innovative, and they're well positioned to capture the growing emerging markets and consumer spend in Latin America. Which is also interesting because with tariffs coming along, there might be more domestic consumption there rather than American imports.
Exactly. You know why I love Mercado Libre as well? Because it is in a good position. Trader friends, if you trade the retail space, they are in a good position to take advantage of the tariffs if the tariffs hit the likes of, Walmart and Amazon and all that, because Mercado Libre also has a very strong pipeline of producers and suppliers from that Latin American side of things. And so they've got diversification there. Also, fantastic place for picking up things like tomatoes if you've ever been into a Mercado Libre. Monkey Man, good morning to you. AppLovin or CVNA. AppLovin was on a storm yesterday. Let's have a look.
They had a quite strong performance coming out after they spun off their gaming business. So that was strong results from them coming out, and I think the market really appreciated the fact that they sort of narrowed their focus and got more sort of tailored in towards where the cash revenue is coming from, as well as giving them some capital.
Yeah, and I saw them move yesterday as well, watching this very closely. Take a look at that move there coming after we had, the projections for revenue. Also, I think the adjusted EBITDA, 80% rise as well. And we are loving that AppLovin reaction there. This is the 15-minute chart, people. Some other movers there, just checking in on Intercontinental, because this is one I have traded before and I heard you and Rich talking about it, up almost 2% there as we speak. Intercontinental, you like Intercontinental, don't you, Ronnie?
Yeah, I guess.
Rich is more a Premier Inn kind of guy.
I'm more of a Airbnb geezer, but
you're an Airbnb geezer.
Yeah, I like their business model.
I don't like their business model.
Why
I don't
not?
like the whole kind of like you pay extras to this, extras to that, service charge, and then service to clean, and then they didn't clean, and then you get a complaint later on.
No, not as a consumer. I mean, as a business, they have a very lean sort of model in that sense, which I think is really interesting. Because they basically own no real estate. They own no real estate at all, but they're still taking percentage of that. And they also have a strong footing in the sort of entertainment space and experience. So very, very good.
If you like the no real estate, then you should like Intercontinental, because Intercontinental has gone into the real estate light space very early on. 10 years ago, they decided, look, we're not going to own these expensive buildings. We're going to make sure that we have quality control and run it real estate light, which was a really big boon for them. Looking at the stock, this is, I'm going to show you the weekly chart there. And as you can see here, when they started that real estate light strategy, that was around the end of 2017, I believe, marching into 2020. And that was also for two reasons, Ronnie. The timing was good, trader friends. One, it was before, of course, COVID made a mess of the tourism industry, and it's now come back now, but it was a mess at that point. And also, don't forget, we had all those terror attacks, right?
Yeah.
So Solvay, one also that is moving at the moment, Solvay down more than 10% there. This is because of the guidance, adding that to the workspace there and giving you a 5-minute chart there so you can see that move lower.
Jesus.
Yeah. Looking for one that is a huge mover. It is coming back to that bounce. So it's not too late if you did not get the first move lower. Stephen A, can you scroll? I'm hearing Phil in my ear telling me CVNA. Sorry, I thought you said Stephen A.
Carvana.
Yeah, Carvana. You like Carvana?
I was listening to an interview with the founder. He was talking to Harry Stebbings, and I was listening to his interview, and he was sort of talking about the sort of emotional roller coaster that he went through with the stock price of the company.
Yeah, it's crazy, isn't it?
Yeah.
It's a 5-minute chart. Let's go daily. There we are.
I mean, Carvana, it's something that I think it's an interesting sort of prospect of the business of buying, selling cars online. Only issue that I see with it, it's a very, very concentrated space. You got so many actors in the UK, you got actors in Europe and in the US. I think if you can get the sort of business model to work, if we can see some sort of consolidation in the market, I think we can see sort of one big winner coming out on top. Most likely, Carvana looks like to be it. They've shown great persistence with the stock. And they're one of the youngest companies in the sort of Fortune 500 companies. So I like Carvana. It's very cyclical, obviously, with the sale of cars. I think with an economic downturn, we can see people sort of selling their second or third car in the US. That's very common for a family to have. So we can see sort of an increased supply. Question is if the demand will follow with it. But overall, I like the business model of Carvana. I think the stock is doing well. Listening to the interview with the CEO and the founder made me even more bullish on them. So Carvana is one to keep an eye on.
It is certainly a real impressive run of very bullish candles there, as you can see. So what we like is a very clear trend, and this one does seem to have a very clear trend. This is a daily chart, people. Ronnie, I'm going to draw that from the beginning of April, paying attention to not cut through any of the price action there, and you can see a very clear trend line, upward trend line there, as you can see for Carvana. I've not used them before. I don't have multiple cars.
I don't have any car.
Are you one of those that has like Uber on tap, or can you drive?
I can drive.
You can drive. Trader Friends, you can drive.
I can drive.
Everyone in the gallery.
I even used to work as a delivery driver back in Sweden during COVID.
Ooh, wow. Would you trust Ronnie at the wheel of a delivery truck? That is the question. Rich screaming in my ear was that you, Rich? CVX, let's have a look at that. Talking about delivery trucks, Chevron, putting that on my chart, whacking that up for you. This is the daily chart here. Now, for me, trader friends, Monkey Man, or was it Steve? Gavin Ackers, you asked me. I can tell Stephen doesn't exist. I thought I saw Steve there. Must be my eyes again. Gavin, just taking a look at this. This, to my mind, is one that will be in pain for some time, especially as we see the whole weak oil picture play out, right? And to me, oil majors such as Chevron, such as, let's have a look at ExxonMobil to see whether we have a similar trajectory there. And yes, we do. They are going to be mired in that sort of sideways formation for some time, as long as the Middle Eastern producers, Saudi, continue saying things like we can hold prices lower for longer, right?
Yeah, I think, companies like Exxon, Chevron, they're obviously extremely dependent on the oil price. Trump has clearly said that he wants to push the price down. Saudi Arabia are increasing their output to further it even lower. But I am, quite optimistic about these sort of companies because one, they're big dividend payers.
Yeah.
There's big defensive stocks.
They're well held because of that on a lot of pension funds.
We got Berkshire Hathaway having them as one of their biggest holdings, as Gavin Akers mentioned. It's going to be interesting to see what Abel does with it once he comes in. But in my opinion, I think these are companies to sort of hold as a defensive option going into a volatile season period. One, look at the dividend yield, 5%.
It's good.
That's brilliant. The dividend yield is by 5%, PE ratio of 13%. I mean, the numbers are brilliant. I think these are, if you have the stomach to sort of go with the fluctuating oil price, because it's obviously a reflection of it, this is something that can act as the backbone of your portfolio.
So just to reiterate here, this is one I'm looking to add in my longer term pension portfolio. I already have eaten enough of BP and Shell, but at some point we're going to see consumption come back in, right? And so this is one that's good, as you said, defensive with a high dividend yield. Just don't bring it up at dinner with friends.
Yeah, just stop oil.
Says the person who does not own a car. But you do drive, right? You do drive around, like the weekends, you hire a car. Is that how it works?
I've actually,
in the Ronnie household?
I've actually never driven a car in the UK.
Whoa! Only in Sweden?
Only in Sweden.
Okay, I don't have many cars in Sweden. I've been there several times.
Yes.
Yeah.
When my family came to Scotland for my graduation, my brother rented a car, obviously, for us to travel around. And I asked to drive, and he was like, no, sit down, little boy. He did the driving, so I missed my opportunity there.
Right, we have quite a few things that we have already got through, but we have more to come. We have Piers Buckworth back in the building with us. They let him back in. After he shocked me in the morning. More will be told after this break, because I will be with him as well after this, but he will be back with Rich. So do stay with us, because we have a whole load of tech coming up.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy. Welcome back to Tech Focus. That's right, we got the man back in to give us all his expertise. How are you, Mr. Buckworth?
I am very well. Very good to be here, my friend.
Now, our boss, Sophie Cocker, big shout out to Soph, she asked how we met.
Aha.
And it's going back about 10 years now. And Piers was my broker to start off with, a friend of Jamie Cann. Yeah. And introduced us. And the great thing about this broker was they could get you restaurant tables anywhere. So, you know, I thought I'd push my luck. Hadn't been to Chiltern Firehouse, and Piers had a contact. So Piers got me, my mum, my sister, and brother-in-law a table for 4 at Chiltern Firehouse. He then phoned me up in the afternoon and said, "Do you know what? My girlfriend really wants to go to Chiltern Firehouse. Do you mind if we come and join you?" So we extended it to a table to 6, didn't we?
We did.
And we had a lovely dinner. The first time we had met, we had a beautiful bottle of wine. But then, halfway through dinner, and this is 11 years ago now because I'm working out the ages, you insulted my mother.
Oh, God, here we go. Oh, dear.
So Piers was telling one of his wonderful stories about a family reunion, and he went, "Oh, it was awful. It was awful." Do you remember this?
I do now. Yeah, thank you for
the whole weekend I just had to go around kissing 60-year-old women.
Oh, God.
And my mum just looked at him and said, "Excuse me, Piers, what's wrong with that? I'm 67 years old."
Yeah, I'm never going to live that one down, am I?
No. So she sends her best. But talking about the best, Google was not the best day yesterday. No. What on earth?
I mean, what an interesting day. And to be fair, the second that news hit the tape, I thought to myself, "Wow, that's just so obvious." I feel a bit silly for not having thought about that prior to that. Obviously, having conversations with clients about it post numbers. But I mean, you know, Eddie Q obviously speaking in the federal court said that for the first time in 22 years, so essentially first time ever, they saw a slowdown in their Safari traffic, which obviously the implication is pretty clear for Google. and they're sort of rapidly trying to incorporate Anthropic and Perplexity into their search engine, so that they can keep up with this sort of huge moving target, which is essentially, people are no longer sort of typing into the search bar; they're using their AI app, which is.
This sounds like a poll of the day. So we can put up a poll. Producer Phil's about to put it up. So do you still use search, or do you use an AI tool that previously you would have used search, or do you use a bit of both? So that is the poll for the morning. But yeah, Google got slammed on it, didn't it?
It was amazing, because you don't often see. I can't even remember the last time I saw Google act like that. They was just absolutely bidless from the moment.
I like it.
From the moment that the news hit the tape, right up until pretty much up until the close. I was kind of expecting some sort of intraday rally of some kind. There was a little bit towards the end, but that was just mainly the tape.
Yeah.
And then what are we now? We haven't opened in the all sessions yet, but. It'll be very interesting to see what happens today and what the analysts have got to say. And I suppose it's a little bit of a wait and see and a bit of guesswork, because this is a a revolutionary moment that we're facing here with regard to AI and how it's incorporating itself into our lives and into the business models of these companies. So it's interesting. Google is kind of bulletproof in so many different ways, but this is their core business. So we'll see.
Shall I have a look at the longer term chart? Let's look at the daily, because of course it had decent numbers, didn't it? And you've seen the bounce back, but
the numbers were okay. They were obviously, the expectations were kind of low to a degree, and it was they beat, and they managed. Their AI and cloud was the critical part of it, which sort of did the heavy lifting. For the ads were okay, but they've slowed right down. So it was kind of just chopping around. But now it's I like Google, but a little bit, and also now I'm a little bit I'm not quite sure what to do with this stock right now. As a result of this, because it's a little bit of a head spin.
Next one, ARM. Numbers?
ARM last night, sort of in line with many of these other semiconductors. The numbers were good, backward looking, but then of course you get on the conference call and you hear what they've got to say, and there's a lot of uncertainty. Particularly, these guys have got different lines. Of course, they've got exposure to smartphones, which is obviously in a tricky spot. They've got their licensing fees were a little bit weaker. There's the analysts have so far essentially said it's a conservative guide from them. And that may well be true, but they weren't bad numbers, but it's kind of in line with everything else. The numbers have been good. Infineon as well this morning, a similar situation. Their end markets like Apple and cars are obviously a little bit of a tricky spot. So net stocks coming off and needs to consolidate and wait for the trade news that we all desperately need.
Yeah, down 11% after hours. Bit harsh, isn't it?
Yeah, a little bit much, but I think it's a bit of a jumpy tape right now, and this is one of the most expensive stocks in the group, so they have to do well, otherwise they just get hammered.
Now, a couple of nights ago we had AMD numbers, so just so everybody, this wasn't last night, but let's look at Mike Reuter on the chat. Welcome.
There he is.
Now, Mike Reuter is Pierce's colleague and right-hand man at the moment, but he was also my first ever ECM manager. So ECM, Equity Capital Markets. So it was Mike that used to give me the buyback for Rio Tinto, I think, back in the day. We used to do Rio's buyback at Credit Suisse, and
he's a good man.
Thank you for joining us. Very good man indeed. So AMD.
So AMD, obviously we're just casting our minds back a couple of days, a couple of nights, but it's definitely worth mentioning. Obviously AMD is one I spoke about last week on the show. Expectations and sort of the street had got quite negative on it. Not with particularly good reason, if you ask me, because their AI business is growing at 68%. This quarter it was actually 73%.
Wow.
Overall sales are now 38% growth, which is actually, if you consider this is trading on 16 times forward, and the size of what and where they are, you don't normally get valuation support with growth like that. So I think that obviously the tape is a little bit tricky right now, but I think AMD should finally have some stability and see if it can break out of the downtrend, which has been in for quite some time. But the numbers were good. They took market share from Intel a little bit, again in CPU, and they took a little bit out of Nvidia as well. And obviously that's the game here. Can they take incrementally more market share in the GPU accelerators? And if so, it's very clear the stock's just going to continue higher.
Would you rather this or Nvidia?
I would much prefer AMD right here and now.
God, that's interesting.
Valuation, sort of the fact that it's very unloved and there's a hell of a lot of room for upside. It's very underowned, and there's the valuation support as well. Plus, they're not quite as exposed to the Chinese situation. They are. They're putting down 1.5 billion essentially as a write-off, but that's 1.5 billion out of $30 billion of sales. So it's what, 5%. So it's not really particularly big for them. And Nvidia's exposure is probably double that.
So here we go on tip ranks. 22 buy ratings, 8 holds, no sales, $125 target. That's 27% upside from here.
Yeah.
Cantor's 21% upside. Is there any really good analysts in this?
Do you know what? In my experience with this stock over the years, I started looking at it in 2013, there's never been any analysts who stand out on this. In fact, this is one of the stocks which stands out to me as having analysts who just literally chase the price action and each other up and down. And they actually, the way that they do that makes it actually sometimes quite easier to call the stock. So whenever it's roofing it and going parabolic, you might see 5 or 6 or 7 upgrades within a week or even a few days. Yeah. And then probably this is the moment to have it, it's going to come off for a while, which is exactly what happened last time. So no, I mean, Bank of America's, is it Vivek? I think he's quite good on this stock. He upgraded it yesterday and had some fairly rational comments to make, but there's no particular analyst that stands out.
Generally, everybody's around 20 to 25% upside on this, so 125 target. Yeah. Good. Right, I guess we should touch on the Fed from yesterday, shouldn't we?
Yeah, I mean, it kind of got drowned out by the end of the day with this news on the diffusion rule walk back and all this expectation of trade talks, etc. But
just run us through what diffusion rule. So the
diffusion rule is essentially a Biden administration rule, which is a whole muddly pile of red tape between cross-border licensing, tech and tech. Trade deals, so essentially limiting how much can be bought and sold between the US and their trading partners, and they're done on an individual basis. It was quite complicated.
Yeah. That's what it was hit for, wasn't it? It was disliked because it was just so complicated.
Yeah, I mean, and Nvidia and Broadcom literally went to the Biden and said, please, can you try and change this because it's just too complicated, and it dumbs down and reduces innovation and growth in our industry and ultimately makes us less competitive. Mm-hmm. So Trump came out last night and said he's going to walk it back, and the implication replace it with a less complicated, less red tape, less bureaucracy, but the implication is that their trading partners and their allies, so let's say Europe, just Europe, for example, ASML, will be less complicated and more favorable, but it's unclear what will happen with the China part of that equation, which means that we're still in almost the identical situation we were before, which is the focus is on the China situation, not the Europe situation.
And Section 232, which sounds like it'll definitely happen.
Exactly right, yeah. So, I mean, net positive, the market likes it, as you can see, and it's, ultimately it sounds good. Mm-hmm. But I think we should keep an eye on how the China angle or the China part of that equation pans out.
Which we'll find out a lot more about this weekend, won't we?
I hope so, yeah.
Switzerland to get involved?
Yeah. Well, I can't wait. I mean, finally, right? Finally, we've been waiting for news simply of them having a conversation, right? I mean, it's amazing what we cling to at the moment. But I mean, the conversation is step one. Yeah. How they, Paul Tudor Jones came out and everyone's got their own opinions on what happens next in terms of where those numbers come from. He was suggesting that they will cut it by 50%, the tariff note, which would still make it a huge number. But
that's the most likely scenario.
I think that sounds sensible, right? It sounds like, I mean, we're all guessing, but I mean, at least that would be a clear statement of intent and would relieve a lot of pressure, because at the moment trade's just seizing up, and obviously people are having to raise their prices. So it's it'll be very, very, very well received if they come to some agreement on tariffs being lower.
But will it? I mean, is it not already in the price at 5,000, nearly 5,700?
Absolutely, yeah. And hence the market sort of spiked up with the algos on the news of them having a meeting, and then immediately went back down. And the 200-day for the Nasdaq, the 20,000 level I was talking about last week, is is huge resistance. We went through it this morning. I think we're above it now on this diffusion rule thing.
Yeah.
And all this expectation of what's going to happen this weekend with trade talks. But certainly my view is that in the short term, there's a lot of we've had a huge rally, earnings positivity has been priced in.
Look at the Nasdaq there. I mean,
where are we now?
That's incredible, isn't it?
Yeah, there we go. I mean, look at that. So it's 23, almost 24% off the lows in less than 4 weeks or something.
Is it 24%?
Welcome to the modern markets. Yeah.
Wow.
But, I think that there's it's hard to mount an argument for the market to go too much higher in the short term, because even if we do get a trade deal, we've still then got to see how that filters through into, because the data's starting to slow down, right? And this guidance, you can't just turn it on a dime.
Is there a trade for long a Nasdaq, short a Russell, or short Dow?
Yeah, I mean, well, I think the Russell. I mean, the Russell is an endless headache, right? I mean, back in the day, it used to be just packed full of cyclicals and basically KRE, and you've got your banks and you've got your a lot of value stocks in there. But it's a little bit distorted these days. You've got MicroStrategy and other names in there. But I mean, it's the ultimate. It's the real index, right? It's the ultimate. It's the if you look at the Russell, you can tell what's going on with the economy.
Yeah, well, we know that if we look back to the start of 2023,
Yeah.
it's July
basically done
2023
nothing,
we're
right?
exactly the same level.
Yeah, I mean, and there's lots of people, including myself, who've been last year expecting this to perform a lot better. But again, it's very sensitive to inflation and rates, and it's and the economy. And if you want to find out what's really going on, in terms of stock market reflection of the economy, just look at the Russell. But I mean, the Nasdaq's not, and the S&P, which is essentially the Nasdaq anyway, not a great read.
These are the companies that cannot get a carve out, right?
Exactly. Yeah.
So if you want to be exempt from tariffs, you buy the Nasdaq.
Exactly.
And if you look at the ones that are really going to struggle, higher unemployment, higher inflation, lower prospect for rate cuts, then this is the most likely to go back to the lows.
Yeah, I mean, if we have a problem and we enter a stagflation situation, and the bearish argument plays out, this is going to get clobbered. Yeah. Mm-hmm. When I say this, you've got the Russell's on the screen. Yeah.
Yeah.
The Russell. Yeah.
Yeah. Right, now, we had a cracker of a set of numbers from Disney yesterday.
Yes, finally.
So, no taking the mickey. What do you think from here?
Yeah, I mean, well, this is, as I was just saying to you before off air, this is part of the group of the 5 big US titans, if you will, who have been in the doldrums for quite some time, including Nike and Intel, but a much needed quarter for them. Very strong beats. The bottom line is obviously critical for this company, and it was a huge beat on the bottom. The guide was higher. Costs are under control. Iger's obviously doing a good job.
Yeah. But surprisingly good.
Yeah, I mean, it's a difficult company, right? In terms, it's not. They've in terms of the streaming, which is what was the big hope for growth.
Yeah.
They've completely dropped the ball, right? I mean,
you got Disney at home for the kids?
Yeah, I do. I mean, they love it, but and it's great. The content's good, and they've obviously got the 3 different studios packed into one, so it's good content, particularly for children. But in terms of actually monetizing their streaming business, they don't have enough content, right? And they just, Netflix won that war quite some time ago, and they did it through scale, right? I mean, they spend $30 billion a year on content. Maybe even 35, I think, last year.
You can't fight that,
can you? You can't fight it, and they've managed to make money out of it as well. So Disney, but the parks were good, studio was good, and obviously low expectations, and it's coming off a low base, but ultimately a positive step forward for Disney for sure.
And a new park coming.
And a new park in the Middle East. Yeah,
Flintstone.
Exactly right. There's a lot going on in the Middle East, isn't there, at the moment?
Yeah.
A lot.
Yeah.
Critical part of the world.
But thankfully, Trump's stepping in to mediate.
Yeah, thank
India
God. Yeah,
and Pakistan.
Yeah.
So,
I saw that this morning. Yeah, thank you very much, Donald. Wonderful. Thank God.
Right. So, you mentioned Disney and Nike being another one. Now,
yes,
to me, it's just a matter of timing. That's all Nike is. But I'm not sure where exactly we sit in the turnaround. Yeah,
that's the $1 million question, and obviously the turnaround has taken an extra step back with regard to, or on the back of, Trump essentially putting 80, 90, whatever it is, 92% tariffs on the the one place in the world where they have everything made.
Yeah.
But, you know, I don't know, it's hard. My view on this is that it's so bad and so ridiculous that it can't be real. In other words, there has to be some form of outcome here, which is a hell of a lot less than that.
Yeah.
In terms of actually moving their factories back to the US, which is what Trump's essentially pitching, I don't know. I just don't think that's realistic. So in the short term, they've got some issues, but strategically, they've got the new CEO who's now focused back on the two things that they dropped the ball, which is essentially collaborations with celebrities. He's got this collaboration with Kim Kardashian and Skims, which is smart because they failed to do that prior, and they've got back in bed with all the retailers and the Foot Lockers, because it turns out people like to try shoes on before they buy them.
Apparently so.
So all the right things are in place, but we need progress on tariffs, which will probably see a relief rally in the stock, just purely based on that. And on top of that, of course, we need some time.
Earnings May the 31st.
Yes, correct.
Now, I thought that he kitchen sinked the last set of numbers.
Yeah, and then did it again.
But with the tariffs, then you've got a chance to not just take the kitchen sink, but the one out in the garage as well.
Exactly. And there's a lot of that going on with these big companies. I mean, it's completely unrelated, but Intel and all these guys who've been struggling, these legacy players with core businesses under pressure. It's just kitchen sink after kitchen sink.
Yeah.
But technicals. Have we got which one have we got on the screen?
That's Nike there.
Yeah.
Do you want me to get some?
Yeah, no, that's what I was hoping you had on the screen. Yeah, I mean, it needs a lot of work, right? I mean, we need to essentially get out of this downtrend, and short term, I can't imagine we get much beyond 65.
It feels like it. They've got to prove too much. They've got to have the tariff turnaround. But an opportunity to buy this at 50, 52, something like that is
Yeah, I mean, I think it's probably going to be a little bit of range, but I mean, there's, as is always the case, all the analysts are coming out and sort of almost on a daily basis and saying 54, 56.
Yeah.
Some, I mean, Bank of America, I think, are the most bullish. They brought their target from 92 down to, I think, 80s, 82 or high 70s. But I think everyone's just guessing again, because we don't really know, do we?
They do not know what's going on in Oregon.
No, I mean, it's impossible they have to do their job and they have to put their numbers into their spreadsheet, but it's just assumptions. It's exactly the same as you and I sitting here and going, we think it's going to go there, because whatever target price they have is based on what they think the sales are going to be, and we don't know what that's going to be until we get clarity on trade and tariffs. But this has been hit and depressed really aggressively, so I'd imagine we've got...
Do you know what I'd really like from them is a strategy day?
Yeah. And
for them to come out and say, right, here is the next innovation.
Yeah.
And this is going to how we're going to work with Kardashian over, what's the next?
Well, they kind of had that. I mean, this new CEO has been relatively proactive, and he
hasn't announced any big innovation.
No, he hasn't really done it. In terms of innovation, it's completely and utterly zero.
And then I think there's a chance they might sell Converse.
Okay,
so
yeah.
Get out of Converse, take in about $2 billion for that.
Yep.
Put some of that into the new innovation. So spend 600, 800 million on a big bang new product, and then do the rest in a buyback.
Yeah, fair enough. That's all possible. But you're right. We need some clear and distinct and interesting strategy.
Yeah.
Something new.
I was in Carnaby Street yesterday and looking around Adidas shop. Boring. It's campus, it's Samba, and there's just nothing new.
Yeah, I mean, that's interesting. Adidas, of course, are consistently outperforming Nike and have done very well on the collaborations, and recently perhaps dropped the ball in terms of new product lines, but that's why they've outperformed. They have been good at that. But I think it's a little bit of it's a consumer preference, right? I mean, personally, I only wear Adidas, never Nike.
Right.
Yeah. I mean, for me, it's just a black and white. But yeah, I do think Adidas have done a much better job in terms of their branding and their sort of keeping up with the trends and collaborations and everything. Which is why they've outperformed.
But that's when you say keeping up with the trends, I think from what I see, that's done.
Yeah.
There's nothing. there's only so many Sambas you can buy before you think, oh, I need to
Yeah,
try something.
agreed. Also, there's so many sort of boutique brands and upstarts, right? And who are just coming at them from all angles, and who are killing it in the innovation and brand space.
It's a very good point. I did forget to say. So Monkey Man and I have been in Deckers together. We so backing Hoka and UGG, but I have let my Deckers go. I just got to take the loss on that one. I think I lost about 20% on it in the end. But you go into somewhere like Office and they're just not getting the space that they were. Yeah, it's actually all going to on running.
Yeah, exactly. I was just about to mention that one. Yeah, you've been doing well. I haven't looked at the chart for that in a while. How's that getting along? How's that coming along?
It's had a decent bounce. Pretty much along with everything else. There it is. But I think I'd rather be in this one than in Deckers because
it's a good company. This one.
Yeah.
Very good.
Really good.
And I mean, look at that chart versus Nike as well. I mean, it's
oh, goodness.
a completely different universe.
Anything else you'd like to have a look at, Mr. Buckworth?
I'm just going through our list of things that we needed to talk about. I think we've kind of... I think Ange spoke about AppLovin before, so that was another one.
Yeah. Well,
which was last night.
So you're going to stick around. In 4 minutes' time, Ange is going to come and quiz you about that.
Oh, okay, great.
So you're going to speak about AppLovin. Monkey Man there, up 2% on Deckers. Well done, sir.
Oh, there we go.
Well done. Well held. But yeah, I'm going to duck out and I'm going to let you guys do the all sessions open.
Perfect.
And have a catch up. Any questions that you've got for Mr. Buckworth, the tech specialist? He knows pretty much every stock in the US, so not to line it up for you.
Monkey Man is a regular on our chat here, I've noticed.
He was the first ever on the chat.
Gotcha.
Back in September.
Love it.
And then Darroch, I don't think I've seen before. So there you go. The new and the old. Andrew McKelvey's our UK specialist, so he is pointing out JD Sports now 85 pence.
Wow.
When we started talking about a Nike turnaround, Nike were $56 and JD were 78. So you would have made 10% there, and Adidas are down and Nike's unchanged. So
85p. Wow.
Great shout from Andrew there. Right, good stuff. We'll see you in 2 minutes.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, welcome back to the show. And as promised, we're here to take you through the opening bell, myself and Piers. Good to have you back, Piers.
Very good, very good to be back.
We didn't put you off the last time.
Definitely not. No, I loved it.
Right, let's have a look at all sessions because it is proving to be a very busy day here. Having a look at some of the gainers. Here we are. Off to the races.
Oh, right, we're open.
Piers, take us, go through the top gainers there.
So clean spark. There we go. We were just talking about how I knew every stock in the US tech space. Never heard of that company in my life. MicroStrategy.
Yeah.
So I mean, it's this is just fascinating. I mean, I was talking about this the other day. This is now obviously part of the IGV, which is the big US software ETF, which is amazing that this company is now part of that. But you know, the price action is just extraordinary. It's ripped through that 200-day, and obviously this is just a very special situation in the fact that it lives in its own universe. And
I'm glad you brought up the ETF too, because it wasn't so long ago when people look at MicroStrategy and go, oh,
Well, I mean, before they became a Bitcoin proxy and a Bitcoin bank or whatever you want to call them, they were just a struggling tech software company losing money and kind of potentially going out of business. And then obviously the game changed dramatically, and now it's a binary situation on Bitcoin.
And we're seeing that move higher. For those of you that on the show, Trader Friends, I know some of you bought into Bitcoin yesterday. It was talked about on the show. You can see here lots of those names heading higher. Coinbase, they're up more than 3.6%. And also some of the quantum computing stocks, IonQ as well.
SoundHound is on that list as well, which is good news.
Yeah, and we talked about Carvana earlier on with Ronnie. I drive but never drived in the UK. Let's have a look at the losers list then. Right.
Right, there we go. What have we got there? QQQ down.
Novo Nordisk.
Yeah, well, I think that's probably just a little bit of a pullback because they've obviously had a big rally off their lows on the back of the collaboration with HIMS, and obviously some positive update from the company yesterday. So I wouldn't read too much into that, to be fair.
Yeah, plus also
Eli Lilly down as well. So that's all this kind of the same vibe.
Yeah, and also the it couldn't go up. For forever, right?
Well, yeah, I mean, it's
competition right now. And, the AstraZeneca's, all the other drug companies saying they're also going to get in on that space. The Hims and Hers. Taking a look.
Hims and Hers is an extraordinary stock.
It is.
It's the top of the retail list at the moment.
Yeah, Monkey Man, well done you for holding Hims and Hers. If you still have it, we also have SPDR gold shares there.
Yeah.
Johnson & Johnson. I got stopped out yesterday in gold.
In which one? In gold?
Yeah.
So you long or short?
I was long on a one-day movement. I got stopped out.
Yeah, I think. Well, I mean, gold's obviously. I think gold definitely needs to try. It had another go at the highs, of course, after selling off aggressively, and we all thought perhaps this is topped out for the time being, and then it had yet another go at the highs. But I think, I personally, I think gold is. If that US balance sheet starts to improve, which is obviously Trump's laser focus, then I think gold may well be in for at least some consolidation, but it's a very tricky one to call.
It is very tricky. And I got stopped out at 3,333 just to make it easy for myself to remember. Let's go tech. I'm always so excited when you're here, Piers, because, I feel like I'm the kind of resident geek here. But the biggest story this week that really caught my eye and thought is going to really be a game changer. And should I move it out of my long-term pension? The whole Apple's Eddie Q coming out saying that Apple is looking at its own AI-powered search alternatives. And I thought, dear me, if this drives eyeballs away from like the alphabet Google and the usual names, that's going to have a huge impact on their advertising revenues. Yeah,
I mean, as I was just saying with Rich, I mean, this is kind of it's a big deal, right? I mean, the Google are the kings of, we've got Google and we've got Meta. They've got all the eyeballs in the world. They have all the ad dollars. And their businesses, as a result, are incredibly consistent and incredibly profitable. But we're obviously going through a revolution right now, and AI is going to change the way we operate our lives and the way these companies operate as well. And it's just a moving target. So
everyone's speaking into phones now as well.
I mean, I do it all. It's kind of a no-brainer. And as I was saying, I feel a bit silly for not having sort of just sold this stock because it's kind of obvious, right? I mean, obviously that's not the end of Google. I mean, they've got their own AI business which is growing, and they've got their cloud, and it's going to be okay. But on the margin, this is a big deal. I mean, I reckon 50% of my searching is pure just talking to my AI app, which is more efficient.
Exactly. And it'd be interesting to see whether they, so I use ChatGPT as well, whether they change that sort of like clear space. My bet is they won't, right? Once they get traction, they're going to do what all the others have done, your Alphabets, your Amazon, the Apples, and they're just going to have like advertising and, you know, on the side, because all that is like very, very lucrative eyeball space.
Exactly right.
Says the daughter of a creative director who's now retired.
But I mean, it'll be interesting to see how they pivot, right? I mean, so Apple, who obviously were the ones in focus yesterday as they were in federal court, you know, they've got stakes in Anthropic and Perplexity, as most of these guys do actually. They're the standalone AI apps that basically all the big guys have stakes in. They're going to integrate that into their search function. So I think it's difficult to say really, because we're all kind of just catching up with the news and it's changing on a daily basis. But definitely a big deal for Google.
Big deal and huge reaction too. For those of you that missed the action, down more than 7%. It's kind of coming a bit back up right now.
So where are we in the all sessions in Google right now?
We are up 1.5% there.
Okay.
But I think it closed at $152. We're now 153 there. So you know, a bit of a, not much though compared to yesterday's fall, a bit of bounce back there. Also, the other big thing, of course, you know, we talked about Trump a lot this morning, but also the fact that we're now waiting on this potential turnaround in the chip space.
Yes. The diffusion rule, you mean?
Yes, exactly. So,
well, I mean, as I was saying, I've read everything that there is to read on that this morning, which is essentially just you know, Wall Street Journal articles and Bloomberg articles and so forth, and the actual news. And obviously, it obviously has positive implications, but I still don't quite know what is what. You know, they haven't said what they're going to do with China. Obviously, we might have more clarity on that over the
after this weekend.
I doubt we have any clarity after this weekend, but we'll see. I mean, the clock is ticking, right? I mean, listen to what Jay Powell said last night, and that's kind of what's happening, right? There's concerns over inflation up and growth down, which is a very bad combination. So. Unless they get a trade deal and bring those tariffs down pretty soon, I would imagine that's going to become a problem. So
with China, I'm in the, you know, history doesn't repeat itself, but it does rhyme. And you're not going to see much this coming weekend. There's going to be like, we talked about a deal, the door was open, we came together, we talked about a deal. And then it'll be the 11th hour, right? It'll be just right up to, and everyone's going to be on tenterhooks, and then boom, something is signed. That's how it normally works, people.
Yeah,
that's how it normally works. But looking at NVIDIA as well, the huge thing here, and most people who trade this know this, the biggest leverage is that, you know, talk about tariffs all you want, talk about, you know, these chip restrictions. Biden, for those of you that follow the space, imposed export controls to limit China's access to like those super fast AI chips, the H20 and all that. But Trump is looking to repeal some of that. NVIDIA itself, very concerned because they don't want China themselves gaining a huge march, and he says they already are in this space, right? But the two key things in terms of what China produces, gallium and germanium.
Well, there we go, exactly. They've got the rare earths.
Yeah, and guess how much gallium, I think that's how you say it, is produced out of China in terms of world supply?
That's a very good question, which I do not have the answer to. You can
come on, take a guess.
You're going to tell me. I would imagine a small number. I would imagine the question is how much ex-China production.
I'm still holding. Monkey Man's asking. He knows what
I would imagine a small number, probably somewhere in the region of 20 to 30%.
98%.
So that's what's done ex-China.
No, that's what China.
Oh yes, exactly. So, okay, got you. Wow, so it's a hell of a lot smaller. Yeah, there we go.
Yeah, and the fact is, you know, it can just say, well, you know, you want to, you know, hit us with that. It's fine. We'll keep this mineral, this, you know, it makes everything faster.
Yeah.
Right? Transistors, everything faster. That's why we need them for the super fast chips. Look it up, get them germanium. And, you know, China can just say, we'll just happily use this for our own consumption. Thank you very much.
Exactly. I mean, they do have I mean, listen, the US and China have different leverage points, but China are definitely holding some very strong cards.
Speaking of which cards, let's quickly also bear in mind that it is, lots and lots of key dates coming up in terms of trade deals. We've got, of course, that China-US meeting this coming weekend in Switzerland.
Yep.
But we also have later this afternoon.
What have we got this afternoon?
With the potentially first out of the block in terms of from Europe, because
Oh yeah, of course, yeah.
there was a meme going around a few weeks ago going, does the UK have anything to make an agreement about? But this afternoon,
that's the question, right? I mean, it's a little bit deflating hearing that our first trade deal is going to be US UK because they're friends. It's 10%, and ultimately, who cares, right? It's not going to change anything market-wise.
Yeah, totally.
So, in fact, quite frankly, the way I look at it is even Europe's obviously critical, but it's just all about China.
It is all about
That's
China.
the problem.
That is a problem. And until that elephant in the room has been resolved, I think
exactly.
it's completely deadlocked. We have some very key questions on the chat. Blake 7 asking top 3 tech stocks to put in a pension.
Top 3 tech stocks to put in a pension. Wow.
Blake 7, can you tell us your time frame? Because we always talk about time frame here. Time frame is very important, if not the most important thing.
Yeah.
Right? So kind of like, I mean, I don't know, Blake 7 might be a 25-year-old.
What time frame are we going to put in?
He could be, I don't know, 50?
50 years?
No, I mean his age or
sorry,
her
got you,
age.
yeah,
Blake
yeah.
7, you could be a woman.
Yeah.
That's why I'm saying, what things could change dramatically. I mean, you could be, I started putting in money into my pension when I was 21.
Yeah, wow.
So,
into tech stocks? I hope.
well, I didn't know
can't really do that,
much
actually, with
then,
pensions.
so I was,
Well, even if you...
there you go.
There we go. So what plus one?
See, that is a...
There we go.
See,
Amazing.
Rich was laughing at me in the gallery. That is a real
1+, yeah.
pertinent, because things could change a lot, right? Like we're talking about Alphabet and Google, right? The time frame matters because...
Well, I think we've got a clear runway at least now, which is for the next. I think. I mean, it's anyone's guess whether it's at the very least we have 5 years, probably more like 10 years of runway of growth with regard to this AI capex story. And quite frankly, I mean the demand for more and more bandwidth, lower latency, more memory is for human beings to use their phones and use their computers faster and more efficiently it's kind of just it's just a secular growth story. So for me, it's got to focus on the picks and shovels for that.
Yeah.
And AMD, as we mentioned before, is right in the epicenter of that. The stock is cheap, sold off aggressively. You don't often get a chance to buy AMD in a situation like this. So for me, that would 100% be in there. Then SoundHound would be the other one, which is on that list of the all sessions we had earlier on. I've been writing notes on this for my clients in recent times. These guys are growing at 100 and numbers are actually tonight 110%. They're actually been around for a long time, but they are pure AI. They essentially make the technology to interact. I mean, the cars are their ultimate target market, of course, because in a car you don't want to be on your phone. You want to be interacting with the AI voice assistant. So they've done deals with multiple players, including NVIDIA. In fact, NVIDIA were a shareholder, and then they actually exited the position recently, which saw the stock come off. But that one would be in there for me as well. And then we need to do one more, don't we?
Yeah. For your 1 year horizon, let's see.
And so that's a 1 year horizon as well on those ones. I think. Do you know what? On a 1 year horizon, I think it's got to be AppLovin.
Yeah, AppLovin did really well in the previous session, as we talked about earlier, and also anything in the gaming space that is seen,
which they are in, of course.
And look, here we are, all sessions as well in the space that we're in. The next frontier, people. The next frontier. This is a 15-minute chart. There is gaming technology, right?
Yeah,
everything.
Exactly.
I've even seen. Have you seen this, Piers? I couldn't believe it. It looked like a broker's app. It really did.
It looked like a what, sorry?
So the app that my son showed me looked exactly like a broker's. It had 1 year, 1 day, 2 years. And I was looking at it thinking, what are you doing? they're trading Pokemon cards.
Oh God.
And they're trading, all sorts of skins, all sorts of. So the new next generation, the center of growth. If you look at Tencent, you look at all those big tech companies out in China as well.
Yeah.
It's all about gaming.
Yeah.
Right.
Agreed.
Talking about this as well, Jesse 14 questions here coming from Jesse 14 saying, can China afford to wait until Trump's term is over?
God, absolutely not. They'd be lucky if they could. I mean, well, China have got a very different situation, right? They've got no inflation, so they can use monetary and fiscal, and they can pull out the bazooka whenever they want, but no one can afford for this to continue much longer, right? As it stands, 60% of trades ground to a halt, and people are having to raise prices, hand over foot. So the answer is absolutely not.
Absolutely not, Jesse. This is a game of chicken here, and everyone loses. Everyone loses. Damo, has the DAX topped out for the?
Yeah, well, I love that question, and it's. I mean, the DAX is just extraordinary, right? It's ultimately.
Yeah, I mean, we saw this big run into the DAX, right, after the Trump administration.
Yeah, I mean, there's a big rotation, which over the last 20 years, there's been a few moments where people have said, right, this is the moment to rotate into Europe, which is cyclicals and value. But this is a totally different situation to history, because now we've got the Germans actually, which again, you can say whatever you want about Trump and what I'm about to say, but he has forced Europe to look at themselves and go, hang on a sec, we need to change what we're doing. So the Germans, who are the most fiscally frugal people, have come out with massive fiscal spending, and huge amount of that's going to defense, of course, and Rheinmetall and Leonardo and all these names are just roofing it. But the problem is that when people decide to buy Europe, it doesn't really, I mean, you could look at it and go, it's overbought and this company's that. There's too much money chasing too few stocks. So they just get bid up and bid up and bid up. So the answer to the question is, I'd be surprised. I think this movement, whether it's right or wrong, into Europe, that is the flavor of the month, and that's what fund managers are doing globally. They've decided they're doing that, and they've all got to then do it. A lot of it's been done. I think it's all a little bit much right here, right now, but it's trying to break out and and I would be surprised if it doesn't.
Let's take a look at the client sentiment there for our trader friends. You can find this on the top menu bar to the right there, and you can see, just the IG universe there. Today, 51% buys. This week, 50% buys, and in this month alone, 50% buys there. So, and it also gives you the picture on the left. The 71% of IG clients have long positions, 29% have short positions. Right, we have to, we have a break. We got play out with Anthony Battista from Tasty Live, all the way from Chicago. This is the second half to the interview we did with him, Rich did with him earlier this week. So stay around for that. Any questions to Piers and myself or to Rich, do put them in Ask at IG, or bang them here under the comments page and slap in your like and subscribe. One last question, Sachs, because you're such a loyal viewer. Good morning to you. What do you think about Cerence AI, which is SoundHound's competitor?
Correct. I mean, there's only a few players in the AI voice assistant space, right? And
can I just say something here? Every time I've had voice assistants in the car, I have turned it off. It's just too. It's really dangerous.
Yeah, I mean, I personally, I don't use it much either, to be fair. But I mean, these guys are all breaking into sort of all different spaces in healthcare and essentially anything that involves being. I mean, you can call literally any company, right? And you've got, I find it very frustrating actually, to be honest with you, but using these AI voice assistants. So yeah, I mean, their target markets are growing, but at the end of the day, the answer to your question is this company is not quite as, I think their balance sheet's not quite as good as SoundHound from memory. I need to double check that. But they also don't have the growth that SoundHound have, nor do they have the high-profile collaborations and partnerships. But they're in the right space. So it's I don't have a strong view on this one, to be honest with you. For me, there's 3 companies to choose from that are listed, and Soundhound to me stands head and shoulders above the others.
Saren's RSAX, just quickly, because I've tested it, helps the BMW.
Yep,
I believe
true.
it's the BMW audio AI, which I have turned off very quickly because the number of times it said, you have to tell it, right? Sound down, sound up 50%. And the number of people in the car doing that whilst you're trying to drive will enable you to crash quite rapidly. So on that note, stay right there because we have to go to a break right now, but we have Anthony Battista coming right up.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
So many times I traded all day and I battled and battled and battled to get the best P&L possible that day, but that wouldn't necessarily leave me with the right position overnight. Anything can hit the headlines the next morning, and I would suddenly, the work that I'd done the previous afternoon was tiny compared with what I'm sitting in the next morning. I like that. I'm going to remember that one. You guys always also say mechanical over emotional, right? Follow the stats, follow the rules. Now, it's just you and me here, Bat. When was the last time you broke your own rules?
3 days ago.
What happened?
I mean, I got too big. I got too big and a little bit pig-headed in the market. Thursday of last week, I thought the market had enough, that it wasn't going to go down any further.
Yeah.
So I took some more delta here. Let me say this right. I took more delta risk than I normally do, but I didn't take any more size risk. So if I like something and I want to have 30 long deltas, that's 30 shares of stock for every contract I do. If you do 10 contracts, it's 300. Do 100 contracts, it's 3,000 deltas. Yeah. Whatever that may be. I went to like 50. So, but I kept my contract size the same. So if I'm always a 10 lot trader, it was 10 contracts, but I increased my delta size.
Gotcha.
If I'm a one lot, I went to 50 delta from 30 delta.
Right.
So I took a little bit of heat on Thursday and Friday. I was still within my parameters, and got bailed out, on Monday.
Yeah.
But I even said on our show, I said I'm scared because I went too big for me.
I used that on our show. On the Monday, I think, the previous Monday, I had said that I was scared, right? And there was so many times that I say something on the show in the morning, and that night I tune into you guys, because of course you come on for last call at 8:30 London time. So a lot of people here in Europe, enjoy their glass of wine in the evening, watching you guys round up the end of the day. And you said it. You said, I'll admit, I'm scared here. And it's that relatability that really is what I think is that winning formula in Tasty. You guys are sitting there and we're going through the same emotions. And to watch you and your son take those calls right up until 4 p.m., 3 p.m. Chicago on the Friday, reassuring people and taking all the heat that they were giving you as well. I mean, that really opened my eyes to, what size of compassion you have as a person and have installed in your son.
Thank you. And that's another thing, when I'm doing the show, when I first got off the floor of the CBOE in 2005, I was there from 1983 to 1980. I started trading in 83 to 2005. When I got off the floor in 2005, I thought, expiration day would be my strongest day. I'd make a bunch of money there and then hardly work for the rest of the month. I'm a professional. I mean, I've been doing this for so many years. I'm going to be so great at this. It was so lonely, and it was so I couldn't find ideas. I couldn't find things to do. It was just, I was alone with my own demons. It was horrible. So the show really gives me a lot of ideas. The backside to that is sometimes I do a little bit more trading than I should be doing while I'm doing the show. So I try to keep it, I try to keep it in check so that I can talk to the viewers and give them all my time. So it is a double-edged sword.
Going back, you mentioned expiration there. So obviously that was just quarterly back in those days.
Yes.
What was expiration day like on the floor?
Well, I mean, if I don't have any statistics to it, but if I went back and I was able to go back and see a young bat and look at his sheets, I made most of my money expiration week and expiration day. If my nut for the month was $10,000, $12,000, meaning, my seat lease, if I didn't own it at the time, was $7,000 to $10,000, depending on what time of the year it was and how busy it was. I mean, anyway, it could have been anywhere from 3,000 to about 15,000, but they average around 7,000, 8,000 a month. And then you pay a clerk, you got to pay them a couple of $1,000s, and you have some back end costs. So you got $10,000 a month in costs before you start trading. So, you got to make $10,000 that month just to break even. That's not to pay your electric bill. I tried to make that nut on expiration day. That was so expiration day for me was, my day to pay my rent. Rent was due, the landlord was calling, and I had to go out on the street and sell myself. So that's what I did.
Is that why you found yourself staying on that floor in your position until you shit your own pants?
That is a true story. That is a true story. Actually, the guys, so I would work out in, it was called the LaSalle Club. It was right in the building that the CBOE is in. JJ's next office mate, I can't remember his name right now for the life of me. Well, anyway, he used to work out and play basketball with us. We all played basketball together. And he had a pair of sweatpants in his locker. I didn't have any. I had shorts. He would wear sweatpants.
Right. And
I was sick. I had to go to the bathroom, and I was how do you say it politely? Foofing in my pants, and everybody was getting all mad at me because the smell was bad. You know what I mean? So they said, "Hey, Bat, walk down the pit and crop dust all the guys over there, and then come back up."
No.
So I walked down the pit and I crop dusted everybody. Everybody, oh my God, I was sick, man. I was sick. I shouldn't have been there. I was sick. And when I walked up the stairs, it was a little loose, and something hit my ankle, and I just walked right out the pit, took a shower, and Billy White was his name, and JJ was sharing office with Billy White, and I went in his locker. I had the attendant open up his locker, and I wore his sweatpants back on the floor of the CBOE to finish the day trading. So I owe him, but that's a true story.
This is why we need to get you on Netflix. That is
yeah.
Forget the trading places and all that. This is the classic stories from the floor.
Yeah.
Now,
well, time is money, man.
Yeah.
You know what I mean? Like it was busy. I mean, it was busy. There would be times, I stood there bell to bell, like from the morning it started, actually an hour before the morning it started, I would sit in my spot so I can get my place. If you didn't get there in time, somebody else might take your place.
Yeah.
After a little while, people respect where you stand, and if you're there in a reasonable time, half hour before the market opens, they'll move for you because this is where you've been standing, for 10 years, 5 years, you'll stand there all the time. But the difference between standing here and standing there, could be the difference between making money and losing money. So, you're closer to the broker, you're closer to the trade, you hear better. So it was important to keep your spot and your place. So I always want to keep my spot and my place. So I was there bell to bell. I didn't leave to go to the bathroom. I didn't leave to go to lunch, especially the first 3-5 years of trading. Later on in my career, when I was a little bit more established, Sosnoff, maybe the last 5 years of my trading career, he influenced me, and we would go upstairs and play a lot of gin in the middle of the day for way too much money. But that's a story for another day, probably.
Yeah. Right, yeah, I mean, you guys must have seen some incredible volatility, right? What's the purest moment of chaos that you ever traded through?
Well, the 87 crash by far. You got to remember something. Before the 87 crash, there was no put skew. We have calls and puts. Call is the right to buy something. Puts is the right to sell something. And if you look at something like an ETF, like I know everybody likes to trade the Dow. If you look at the diamonds, DIA, an equal distance away from the money put is going to be trading, 1.5 times the price of an equal distance away call because of put skew. Everybody's willing to pay for put volatility to the downside because that's how everybody hedges portfolios that they may have that are long stock somewhere else. Well, before 87, if the Dow was 100, the 95 put might be trading at $3. The 105 call was trading at $3. After the crash, the 105 put was trading $6, and the 105 call was trading, $3 still. Nothing had changed on the call. So those people who realized that people were going to pay more for puts and just the wide markets, that was the most volatile time by far. I've never seen anything like it since.
Well, thank goodness.
And by the way, I made more money the day of the crash than Tom Southenoff did.
Oh, tell us.
But going back to being competitive, maybe if you interview Southenoff one time, you can ask him who made more money, or the next time you see him, maybe in Milan, when you're in Milan with him, you can ask him who made more money the day of the crash, Tony Battista or Tom Southenoff.
Just read out a little message from Nick Battista. He will also brag that he made more money than Tom that day, so you can tee him up for that one.
Fair enough. He should.
Yeah, and well deserved. How do you personally define a good trade, Bat? Is it still P&L, or is it the process, or the kind of thought, the imagination?
Well, unfortunately, I think it has to be measured by P&L because that's why we're here. I mean, I don't think you can measure it any other way. And a lot of times I thought I was making a good trade. It didn't turn out to be anything, or it was a loser. Yeah. And a lot of times I thought I was, just doing this as facilitation or maybe tightening up my risk, and it became a great trade. So it has to be P&L. But the great thing about it is you don't know it when you put on the trade. And that's what's ever evolving about this. It's always new. It's always changing. When you think you got it figured out, you don't. You have to evolve. So many floor traders who were good floor traders left the floor and never traded again or never made it because whatever edge they had on the floor, they couldn't duplicate it as retail investors. Retail investing is hard. I mean, let's not sugarcoat it. It's hard. You're trading at fair value, which is amazing because when I first got off the floor, you were not trading at fair value. Markets were way too wide. Yeah, but you have to act and not react. On the floor, you can react and not act as because I'm going to take the other side of what you. So whatever you think you want to do, I'm going to take the other side, and I'm going to get a little bit of an edge from that, and I'm going to try to react and capture that edge. Yeah. Whereas retail traders, we have to act, and a lot of people can't act. You'd be surprised. It takes a real free thinker, and it takes a real confidence. It takes a confident person to act in anything. Hitting a baseball, trading, you have to have confidence. And I think confidence comes with experience, but it also comes with some sort of knowledge. You have to have some knowledge of the markets, not of just the pricing. Hey, the stock was $100, now it's $50. It has to be a buy. No, you have to understand pricing and strategy.
And what do you think that retail traders still misunderstand about risk?
Tom said this, and I'll steal it from him. I don't mind stealing things from people, as you can see. Tom said, he said, you never realize how big small is. Yeah. Like when you have a good trade on, it's always too small. It's never big enough. And when you have a bad trade on, it can't be small enough, even if they're both the same size. So you never realize how big small really is.
Is there a level of volatility that you see that continually causes harm? Whenever we're going up through a level, you go, uh-oh, we're in for one here.
Yeah, I'm going to answer it the opposite way. When we had volatility around 9 or 10, that was the hardest time for me to make money. I mean, I'm a premium seller at heart, but you can do diagonal spreads and calendar spreads, use less risk and stuff like that when volatility is low. But it was like making pennies. Yeah. You would take, I'll just throw out a number. You're taking $1,000 of risk in a normal market volatility. Let's just call it 19% implied volatility. Now we have, 25% volatility today. We've had almost 50% volatility. But let's say 19, 20, 21 is the average. You know, you use $1,000 to make $100. I'm just throwing out the numbers as it. When volatility is 9, you're using $1,000 worth of risk, buying power, whatever you want to call it, and instead of making $100, you know, you're making $20. You know, it's a grind. It's a grind. Volatility at 25, you can use that same $1,000 and maybe, you know, that same make $200. You know, $250.
Yeah.
You know, it becomes a little bit easier to. If you're trying to make $100 and you start out with the possibility of making $250, it's a lot easier to make that $100 than if you start out with $100 trying to make all of it. You know, it's very hard to get all of it. It's okay to get 25%, 50%, 30%, a little easier.
What about these guys that come in, you know, from the COVID sort of era, that they think they can make 10% a month on their capital?
Yeah. I don't know. So I'm going to go back to a story that I had from yesterday. You remember the .com era? Maybe you're too young for it.
Oh, that was my first couple of years.
Okay, well then you're going to love this story because you were probably one of these people that I would shy away from. Every trader was making money. Every retail trader was making money. It was almost like flipping houses during the housing boom.
Yeah.
All you had to do was step in, and you stepped in and buy. I mean, there was a company called like Books A Million or something like that. They renamed it to Books.com, and the stock tripled because they added .com behind. Nothing had changed with their business, but just because they said .com and retail investors buying. It got to the point where I was traveling a lot at that time. And I'd be on the plane, people would ask you what you do, and I wouldn't tell them I was a trader anymore because they would tell me all their stories about how much money they were making. I really wasn't making that much money for the risk I was taking because everything was going in one direction, and it was going up, which is, you know, completely retail and not for me. I like two-sided actions as a market maker. Today I like completely up, but yeah, two-sided action. I would say I was a shoe salesman. I hand to God, I would say I was a shoe salesman just to stop them. So the .com era was the hardest for me. Like
after 07, 08, working in London, you did not say you were a trader or worked for a fund or anything. I was a hug therapist. it worked well right until
you did better. You did better than me. I'm not gonna lie.
Well, I was on a date and you know, beautiful young lady had you know, she loved this story and I was, you know, sort of helping her with her intimacy issues. And then one of my friends walked into the restaurant. Hey, Rich, how's it going, man? Are you still at Credit Suisse? And yeah, I got a slap in the middle of the restaurant.
I could imagine.
Right, we're coming up to some rapid fire now, Bat. Are you ready for it?
Sure.
So,
no questions off limits. After 14 years of doing this show, you can't embarrass me. So go ahead. Fire away.
Favorite option strategy?
I mean, I like a strangle for those who don't mind risk on both sides. But I think a 1-by-2 put ratio spread is a better retail. It leans a little bit long delta. It has it's omnidirectional, as my son would say on his show. You can make money the downside. You can make money the upside. You can make money if the stock doesn't do anything. So some sort of put ratio spread 1-by-2, I think is a real good retail friendly strategy.
Like those. I had plenty of those a couple of weeks ago as well. Biggest trading pet.
If you put them on Thursday and Friday, they worked out a lot better. If you put them on Monday or Tuesday, timing's everything.
Biggest trading pet peeve: being a dick for a tick, missing a trade, or a mistake somewhere in your strategy.
I think not acting. I think missing a trade. I don't. In these markets. In the U.S. markets, I mean, you really can get a pick-em market, meaning, you know, you can buy or sell it basically at the same price. So squeezing is not something I truly do that much. If I go in at mid-price or a penny or two below, if I don't get filled, I quickly move it. I want the position, not the penny kind of thing for me, at least. But not doing something, seeing something, and not reacting is probably the ones that keep me up at night.
Okay. What's more stressful over the years, Nicky Bat's school plays or short a naked call going into big tech earnings?
Nikki, he's gonna kill me for telling this story, so I don't know if I should say it.
You go on.
I'm gonna butcher the name. What's that little instrument like that like preschoolers would play, like a kazoo or a kazoo or a?
Yeah.
It's like almost like a little horn, like beer. It makes like a little noise like that. He must have been in kindergarten, first grade, I don't know. And he was having a recital or whatever, and they were all gonna play this, Mary Had a Little Lamb or whatever, this kazoo, kind of thing. And I get there, I leave work early, and I missed the whole day, and market was kind of rocking and rolling a little bit. I get there to see my son. He's my firstborn. I couldn't be more proud of him. He walks up there. I mean, handsome as can be, looking like his dad. I was proud as can be. Everybody, the teacher, all right, present your because my son's got his hands in his pocket, and they all start playing, and my son's not doing anything. So I think he's got like a big solo. Yeah. And they do the whole thing. He doesn't play. So after the show, I'm like, hey, Nikki, why didn't you didn't play? He goes, I lost mine. I go, when? Weeks ago. So he never went to go get another one. So I sat there and watched my son play. So maybe Nick's plays are more, because I still remember that story. I mean, he's in his 30s. I still remember the story, 30 years later.
Exactly. Love it. The fact he still walked up there knowing that he was just going to have to stand with his hands in the pockets. Brilliant.
Stood there. Everybody else had one. 30 some odd kids. Not my kid.
Who's more stubborn, you or Mr. Sosnoff?
Tom, by far. By far. I've never seen positions. I mean, we were talking about trading.
Yeah, well,
What are we talking about here? I should have before I answer. In trading, he's much more stubborn than me. I don't really have opinions on a lot of things. I mean, I may have opinion on direction for a moment or two, but if I'm wrong, I quickly neutralize it or get my delta a lot smaller. That way, he has conviction. If he thinks bonds are going higher or lower because of what's going on in the market, and I know he's not a micro view, but he certainly has opinions on things. He puts it out there, and he puts it out there in some size.
Well, he was long that euro trade at 105, 104, 103, and kept going. It's now 113.
Yeah, well, everything is relative. We were long at 112, 111, 110, 19, 18 on the way down, too. We were a little bit early, too. So, it's all relative. Again, it comes down to size. And one investor's floor is another investor's ceiling. I mean, I was short bonds a couple of years ago in the 150 handle. That's the 30-year bond. In the 150 handle, it's in the teens now, like 114, 115, 113, something like that. And I lost money on them. Okay. So it's all about timing.
Yeah. What trade springs out? If I said, best trade ever, what's the first one that springs to mind?
87 crash. I sold puts that were mathematically impossible to be in the money.
That was I did that in 08 as well. I'm like, it's a 1x2. The market can't go to zero. Well, like. Yeah. Well, if it is.
Well, they made me adjust. They made me adjust my trade.
Did they?
But as being a floor trader, but it was the best market at the time. Nobody else made a better market. I fought that for years, but they got a couple of dollars back from me. But it was still an excellent trade.
Nice, good job. You've got one meal.
If you make a trade you can't lose money on, it's usually a good trade, but not fair to the other person. And let me say something. That was an extreme example. As a market maker on the floor of the exchange, and I believe this to this day with servers and Citadel and IG who might be on the other side of your trade. Every market maker, that was me, I was a market maker who was taking the risk of the other side of your trade, wanted you, the retail investor, to be successful. Yeah. Do you know why? Because if you're not successful, you won't come back into the market. If you don't come back into the market, I can't make a buck, whether it be commission or if I'm as a broker, and if I can't make money on the other side as a market maker. Now, I wanted to make money first. Yeah. Like, I wanted you to buy something at $2. I wanted it to go down to $1.75. I wanted to buy it back and then watch it go to $5. I don't care. Right. Like, I didn't care how much money you make. I don't care how much money Tom makes or JJ or anybody else. I want to make my nut, then you make your nut. But every market maker wanted their paper, their person that they traded with, to make money because they want him to come back in the business. And that's why the business is so popular and so deep and liquid to this day. If it wasn't, it would be like online sports betting. You know, it wouldn't be as popular as you think it is. It pales in comparison to the amount of trading that you do.
You had one meal left in Chicago. Where would you go? And what would you order?
Oh, wow. That's a great question. It's an obscure place. I would go to a place called Hole in the Wall in the suburbs for some awesome buco. That would be my, and a little bit of their red sauce, some pasta with red sauce. That would be my thing. I'm not a big steak guy.
Yeah.
There's a place called EJ's out here that makes a great pork chop and steak and stuff like that. That would be the public answer. I like a good eggplant parmesan too. So I don't know, something like that.
Ah, nice. Great.
What's yours?
Oh, I tell you what, I cannot wait to come to Chicago. I have heard everything from Sosnoff looking at the pizza we had in Birmingham with disgust and then describing what pizza was in Chicago, to Julia Spina, you know, talking about all the beautiful restaurants in Chicago.
Chicago's a great mecca for food.
Oh, yeah.
We have a great everything from, you know, ethnic food to steaks, and Chicago is a great place for food. We have great restaurants. Hence, we look the way we do.
Yeah, sporty and healthy.
Yeah.
Now, if you could delete one ticker from the market forever, what would it be?
It used to be Sears and Roebuck back in the day when it was a popular stock to trade. I just could not make any money in that stock. And today, it would probably be gold. I cannot make a dime in gold. Yeah, I'm not a trend trader. I'm the world's worst commodity trader. I traded 30-year bonds. I told you I sold bonds at 150 and lost money. They're 115 right now.
Yeah.
I'm the world's worst commodity trader. So commodities for me are too slow moving, too cyclical, too trendy.
Yeah.
Too low implied volatility for me. They're everything I don't like.
Roger that. Bat, thank you so much. This has been absolutely wonderful. One last question.
Great,
So,
man. Sure.
You are the guy that people come to when the chips are down. It's a real tough last few weeks, right? So for somebody out there that's on what they perceive to be a losing streak, their account's bleeding, their confidence is shattered, what message do you have to finish this episode with?
Yeah, that's a you know, we usually like to, at least here, I don't know how you guys do it in the UK. I know sometimes, you know, we like to finish on a high note, you know? I mean you're talking about the worst of times, and there's no consolation to know that I've been there before, or you've been there before, or anybody else has been there before.
Yeah.
But that is gut check time. I mean, you know, anybody can give you $20, you know, when you need $20 when they have $100 in their pocket. But the person who gives you $20 when they have only $20 in their pocket is a true stand-up person. And, you know, it's gut check time for you at that point. I would say, again, if you broker your mechanics and you got too big, at that point, you got to reduce your position by 50%.
Yeah.
Bite the bullet. You got to live to be the next day. You don't want the margin call. And even if you have the margin call, you want to get out of it and live to fight another day. I'll tell you a quick story. When I first started trading in 1983, about 3 months into my trading career, and I was doing pretty good. Like I said, I started about $5,000. I had about $35,000 in my account. I had an out trade. It was the first day the Dow had ever been up $50.
Right.
To this day, the Dow had never been up $50. And remember, we wrote everything down on pen and paper. So I thought I did something with somebody else, and somebody else thought I didn't do it with them. And long story short, this out trade cost me about $40,000, which busted me out.
Oh.
So, yeah. So I could have put my tail between my legs and, you know, gone back to Brooklyn, and my mom would have certainly accepted me. But instead, I went to my backer and I said, "Listen, I'm $5,000 in the hole." He goes, "Well, go back down there." And I go, "What am I going to do?" And he says, "Well, the guy next to you, is he a good trader?" I go, yeah, he's a great trader, man. He's the best trader I've ever seen. And he says, you do what he does.
Right.
And that's what I did. And that's what we try to show you here at Tasty. So
Brilliant.
it's the same thing. You know, do what we do. Not exactly what we do. If I like something, you don't have to like it. You can hate it.
Yeah.
But find a strategy that fits it. Use the right amount of buying power. Keep everything mechanical, and you'll live to fight another day. So for me, for those people who had a hard time, I feel for you. Nobody should ever have to go through it. But remember, it's going to happen about once every 5 years. So, you know, prepare for it every day, even though it's not going to happen.
Right. Now, talking about finishing on a high, Mr. Battista, you are on your way to London with Tom Sosnoff and myself. We are going to be on stage on Friday, June the 20th, sir.
Yes.
Take us through what is going to be happening.
Man, we're gonna have it's a great intimate setting, which is nice. I've never been there before, but Tom has. It's a great intimate setting. You get to mingle with the people, talk with the people. We're gonna trade pretty much, you know, bell to bell. That we're there. I'm gonna run the driver, which means I'm gonna be placing the trades for Tom. I know you have done that in the past. It's hectic. You know it's hectic.
Oh yeah.
But we're gonna have a great time. I think you'll really like it. I think they're serving beer. At least that's the rumor. I don't know. If that's,
beer and wine are on the house.
Beer and wine on the house. So how bad can it be? And if I disagree with Tom, I'll just do the opposite. So we can all make some money.
Good stuff. I'm going to pop the link in below how to get tickets for that. But
Awesome.
yeah, very much looking forward to meeting you in person back. Thank you so much for your time today.
Thank you, man. I appreciate it.
Yeah, some of those stories just pure inspirational.
Thank you, man. Appreciate it. It's been such a warm welcome with IG and everybody there. You guys have been great. So I can't wait to give back and see your customers and talk to them. And to me, it's a gift. You know, I know you wanted to end. I'm gonna tell you one quick last story. When Tom hired me 14 years ago, and this was the first paycheck I ever had, by the way, when we first started Tasty Trade, I took a paycheck and part of the company. Tom didn't take a paycheck and took the bigger piece of the company. I said, why me? And he said, well, you know just enough to not make us look stupid. So I figure, you know, I'll hire you. So I'm going to try to do just enough not to look too stupid out there for everybody. And we'll all have a great time. It'll be fun.
Well, you do it every single day. And here we go.
Yeah, man. That's right. That's right. You got to love that. Team Tony. I love it. Thank you, brother. Appreciate it.
Peace.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, trader friends, welcome back to Trade Expectations with myself and Patrick Taminius, all the way from Stockholm. Welcome, Patrick. Welcome back.
Thank you very much. It's great to be with you.
I know, and so much has happened since we last spoke. I hope you had a good week off last week, but we have, of course, post-Fed day. Also, we're waiting on these. Apparently, there's a deal going to be taking place later on this afternoon. Also, ahead of this coming weekend, all these talks and chatter about that US-China meeting. I really don't think we're going to get any sort of deal there. They're just going to say we met, we came to the table, wait and see. What do you think?
I agree with you. I mean, they've announced that something will come today, so I think they will probably announce something. But in regards to China or India or one of the bigger trade partners, I think we'll have to wait for that.
Yeah, and the big carrot, big carrot that they're dangling this week, Patrick, is of course that it's going to be the Middle East. It's going to be the Middle East. So we've been talking about that too. Talking our trader friends over some of the positions that we are looking at. I think oil is still a short there. Lots of weakness there. But in the meantime, if you're looking to scoop up some shares for your stocks and shares ISA, or for your pension, then perhaps the ExxonMobils and the Chevrons are the ones for you. High dividend play there. Three things that you were talking about in the last few hours that have been driving markets recently. Let's kick off with US imports.
Yeah, so I have a chart on that US has been fronting tariffs, of course, with high imports, and that export haven't moved in the same way. And we can, if we have the chart up, we could we'll see just how much the imports have risen the first 3 months of the year. And what that creates is a flow of dollars out in the world. And typically when you have a large amount of dollars going out through imports, they come back to the US to buy securities, and that's treasuries, but also US stocks. So you see a flow of a buying stock from this trade, actually. So this is one of the backdrops that I've seen that I think contributes to the rise in stocks the last month. Mm-hmm. And there have been some talks about shelves going to be a shortage here in June in US. Mm-hmm. I think that might come, but not perhaps in May or June, a bit later, because there's so much inventory now in the US that has to just be used up before. And if we move to the next, we could actually see here that what has been imported is, in the beginning, the first 2 months was industrials and materials, but actually here in March it has been consumer products. So consumers has been on the rise and buying a lot.
And that kind of makes sense, doesn't it? Because we saw, very early on, before all the tariff announcements, that many companies in the US were trying to, buy the more expensive capital goods, get it across the line, get it across borders before any of these tariffs sort of were announced.
Definitely. And now it's just the consumer doing the same.
Yeah, we're seeing this push into the consumer space.
We do. So, and that has, of course, also helped earnings, not only in the US, but also around the world. And if we look at earnings in the US, we could actually see that it's the S&P as a whole has performed much better than expectations in the last of March, 31st of March. Analysts, according to FactSet, thought earnings growth would be around 7%. But we're around 12%. So that backdrop the last 2 weeks has also helped stocks move higher. And as we talked about last time, that some of the companies have not been able to actually state their predictions or their outlook for the full year, thanks to the tariffs. I think that could have helped a lot also, that we haven't seen those really bad outlooks. So this is also one part that I've been looking into that's been helping stocks last 2 weeks. And and the last part is, of course, rate expectations. I just highlighted the two of the graphs here, and that's the 3%. So that's a major cut this year, and that's in blue, and that has been that's in the dark. That has just been declining the last 2 weeks a lot. And the shorter, the smaller rate cuts has been increasing in expectations. So we can see here, look, for example, if we have 2 cuts, it's been on the rise the last 2 weeks. So I think this is also helped stocks during this upward trend. But this is something that might come to an end in a few weeks.
Will we see that start to change? So given, Patrick, that we are seeing, data showing that tariffs are starting to batter things arriving in Long Beach. We're already seeing cargoes and the port of LA down some 35%. So, we're seeing this impact starting to trickle through. JP has come out saying, that these tariffs, he's just waiting on data now, but did say that they stand ready to act. Also, some huge investors out there, Ken Griffin speaking to CNBC saying there is now this risk of stagflation. And on trade, it is best to be thoughtful in negotiating deals. But, everywhere you look, no matter how you cut it, these tariffs are a form of tax and is going to hurt everyone. Are we going to see, therefore, these concerns about, the U.S. economy and, of course, the U.S. 500, looking at the S&P 500 on the IG platform here, having further bouts of, dips there? Or are we going to look back during Christmas and you and I are going to be sat here going, oh, it was a year to, buy the double dip, triple dip, however many dips we've got ahead?
Yeah, so regarding the stagflation, I'm just wondering where is deflation at the moment, because we can't really see it. It's just above a target, but not that much. So I think the S&P and could trend a bit higher from here, but we will not go to all-time highs, what I predicted. Instead, we'll probably see a new low in June somewhere. And that we have some good backdrops that we talked about. So I'm not really worried in the short term, but perhaps for June, things will play out as you just spoke about. So.
Speaking of which, lots of our trader friends here look at gold and oil. I think oil is in a bit of a rut and will continue to go lower. Gold, yesterday I had expected it to go higher, but I got stopped out there. Let's have a look at gold. Your thoughts on gold and oil?
Yeah, so I think it could definitely go lower and quite a bit lower, actually.
Which is this, gold or oil?
I'll go, the oil price. So
okay.
I think oil could move lower, as low as $40 or so. And that's also because of OPEC raising their volumes.
Mm-hmm.
But we are in a cyclical at the end of a cyclical trend here, that oil moves in 5-year cycles, more or less, and we're in the end of one of those. So I think that oil could actually be much higher in the end of the year and next year, or moving upwards at least. So I don't think the downtrend is over yet for oil, and especially as the economy is weakening.
Great. And thoughts on gold there? I'm just marking up the 40 just so that we can talk about this as the months progress. How about gold? Gold, everyone's calling this a big super cycle, uptrend cycle here. Some even now, it's not uncommon to hear that 4,000 mark being mentioned.
I'm not that positive to gold, actually. So I think we've hit the mark for central banks in terms of devaluating their currencies against gold, which has been the play, I think. And I think they're really hit the mark there. So I'm not that bullish anymore on gold. I think we will just trend sideways from here a bit. I don't see the big macro picture for gold going forward. Instead, I think they will actually have some headwind in regards to some macros.
So perhaps another test of the dip that we saw early May, and if we breach that, then potentially we're heading lower towards towards that.
Yeah, I don't see. That's why I think it will just trend in a channel from here, because I don't really see the case for it going or testing new lows. But if you look at the things as real interest rate versus gold price, that has diverged a bit. So I think when the real interest rate moves up, which is done the last year or so, I think that could be hard for gold to move higher if that continues.
Brilliant. And we just have 30 seconds left. Just a quick overview, since we talked about, consumers now seeing the real impact, and we're seeing the export chart that we put up earlier and the import chart as well. Loads of consumer staples, coming out with numbers, everything from Tapestry to Peloton to, Crocs to these great American consumer names. Are they going to see now more pain going forward? I mean, we've already seen the likes of Intel and I believe Amazon as well, saying that, they've got to, they have to state the impact, right? They can't just sit there and not state the impact of these tariffs any longer. And I think Amazon was one that said they could potentially put it on their site, and apparently the White House said you're not going to do that. The ding dong between the two of them. But are we now going to see in the coming weeks more of this tariff impact? And potentially that could be a negative for many of these big, great American consumer stocks.
Yeah, I'm not bullish on consumer staples, as you mentioned. That I think they will have a high inventory level, and that will be costly for them. And the consumer in the US and internationally are squeezed at the moment. So I think it will be hard for them. But looking into consumer products or retail, you have Shopify today with earnings. And that's an interesting case, especially after their working together with OpenAI and ChatGPT, and when ChatGPT will launch their checkout with Shopify in it. It's been trading good since that news, and the expectations for earnings today is lower than the Q4 earnings, the last quarter, and that was a good quarter for the company. So I think actually there could be some positive surprise for the earnings call today. So that's a stock I'm looking into.
Yeah, just taking this is a rough measuring tool here, which is quite handy on the IG platform. If you haven't used that, Shopify down around 20 odd percent there since the beginning of the year. And it's down around 28% from its February high there. Shopify, one that it could also hurt because it is trying very hard to diversify and expand into emerging markets. Right, Patrick, thank you very much. We have to leave it there, but do like and subscribe. Patrick, have you liked and subscribed our new YouTube channel yet? Have you managed your subscription? Amazing, well done you, well done you. What? And for all those of you who haven't yet, please tell your friends, your neighbor, everyone, if you love this show and want to aid us in our quest to get sponsorship so we can get a proper opening bell from the London Stock Exchange, do like and subscribe and send all your messages to us at IG.com. Right, we'll see you bright and early tomorrow.